Good morning, everybody. Welcome to NinjaTrader Live. My name is Jim Cagnina. Joining us live for Capital Preservation Friday is Pax. Pax, good morning.
Good morning, Jimmy. How are you?
I'm doing pretty good, man. I can't believe it's Friday already. It's just been such this is the wildest week I could remember probably ever. I don't know how you feel about that.
I'm exhausted. I don't know. This has been for me. It's been great. This week has been tougher trading, but this whole downturn from the highs from 61, 66 to the lows of Sunday night at 48.32 has been great trading. But this back and forth this week has been difficult. Margins are raised, and so liquidity is less. I'm sure, I don't know yet, it hasn't really broke, but there are people blown out. There are funds probably blown out, at least blown positions out. We're seeing, something last night. I had a long from the 30-year bond opening range at 112.26 from Wednesday. I thought that was going to be a generational position. Got stopped out. I thought that I had them on, stopped out for a scratch. Gold is up another $100. 200, 250, 29.80 was the low. 20, 30, 31, almost up to $300 just in this week. The S&P and the Nasdaq has just absolutely been all over the place. It is unbelievably dangerous and very, very hard trading anyway.
Yeah, no, for sure. I mean, I've been doing this for a little bit longer than you, and it's wild. We're living in interesting times. I mean, we're going to look back on this. Everyone's saying this, we're going to look back, even Tanya's saying this. We're going to look back at this 10 years later and tell people about it. Do you remember when? It's kind of like
Right.
that the 1999 bubble, the 2008, I remember where I was in 2008 and you do too probably.
I do. There's a lot of like anomalies that have happened this week, a lot of strange things. The Nasdaq was down. The Nasdaq traded the downside limit yesterday, bounced off of it, then traded through it, and it was still an inside day.
Yeah.
It was still an inside day. That's never happened before in my life. I traded the biggest rally ever. I was short. I think I've told that story many times, but I was short in the biggest Nasdaq rally in history, 26%, January 3rd or 4th, 2001. I lost $1.5 million of my own money in that rally. So I've traded very illiquid events. I've traded 30, 40, 50 limit down days in the Nasdaq into the hogs when I was in the hogs too. So I know what that trade's like, and I know how to protect myself in that. And I've talked a lot about that capital preservation all week long. But the other day on Wednesday, right, the big rally day, on Wednesday, the S&P had 14 or 15 100-point reversals in the point and figure chart. 15. I mean, we didn't have a 100-point reversal for months at a time in the fall. I think I'd have to look at the chart, but September, October, November, we didn't have a reversal until December. We had 15
Yeah.
of them. It's crazy. It's absolutely nuts.
Yeah, I just pulled up an E-mini S&P chart on the screen right now. Whenever we have a night, and we've had several of these nights in a row now where we have volume. You have in the Globex overnight session, volume is 300,000, 400,000, 500,000. It's usually, a buck 50, right? And now it's just double, triple that volume overnight, and it's causing these huge 175 point ranges when usually we're at 20 points. So it's a lot of volatility, a lot of price action right here. And I did pull up your lines. I got your lines this morning. Thank you. I know there's a lot of lines on the screen, guys. We're going to walk you through those as well this morning here. Right now we're trading at 53.22. Kind of a little pause going on maybe.
Yeah, we're a little pause. I was hoping for that yesterday. I need to go to the dentist. I need to go to the eye doctor. I need to get my oil changed. I need to go to the bank, and the markets are just too busy for me to do any of it. But yeah, no, we're trading between big levels, and we keep butting back up at that. We butted back up on Wednesday at that 55.09 level that we've talked a lot about.
Yeah.
And then we fell apart yesterday to August 5th's regular trading hour low, going back to August 5th, which was 51.40. We stopped there and then we rallied back up through each level is going to be 52.43, above. So when we held there, we got back above 51.60, then 52.43, 52.82, and now we're kind of churning between 53.05 and 53.97. Above 53.95, we have really kind of a whole lot of air between 53.95 back up to 55.09. If they can get them above 55.09, then maybe we can see some, a pause, a little bit of a respite, margins come down and people trading. I think it would, anybody that pretends to know what is going on in a macro sense, I think is just, it's a guess, it's an opinion. And I don't trade guesses, I don't trade opinions. And we have to trade this market level to level, take it for traders anyway, take it one trade at a time, one day at a time, one trade at a time, one level to level to level with tight stops, or defined stops. Know where you're going to get out before you take the trade. And oh my Lord. And the name of the game here is absolutely capital preservation.
Yeah. Yeah.
Live
I
to
mean, it's
fight
like,
another day.
it's usually capital preservation Friday. Now it's like capital preservation, Monday through Friday. So, so I got it. One of my key levels matches up with yours, and I just want to talk about it really quickly here. And this is just a daily chart, so this is a longer term point of view, everybody. And with that giant green candle, right? The giant green candle that we saw on Wednesday. I like to look when that happens. I call that a benchmark candle or a keystone candle, or whatever you want to call it.
Mhm.
And I look for the midpoint, right? And the midpoint is right next to your 52.43 level. And that to me is kind of like a line in the sand, right? As long as we're trading above that, then all right, maybe I'm not, maybe there's a bottom. Maybe I'm not so bearish anymore. We're trading below it, opposite. So that's kind of a key point to me, that 52.43. And it was really kind of I was like, aha, when you gave me that level this morning.
Is that the midpoint? It is the midpoint, isn't it?
Yeah.
Oh my Lord, I didn't even pay attention to that. That's awesome. Okay, that's good. Yeah. All right, that gives me really good trade location. That gives all of us really good trade location, and completely defined completely defined risk. So here's the thing: is that I think 90% of traders fail. So why do I want to think and act like 90% of traders? I don't. So I think the majority of traders are just going to say, well, all right, we're above 52.43, so I'm going to, we're above 53.05, so I'm going to get long, with the 52.43 stop. I don't do that. I'm going to wait for the market to get back down to that level, and I'm going to get long there. I don't do this. I'm going to trade the opening range, but I'm, saying for those of you that do, you can get long at your risk at 52.43
Hmm.
with a very tight stop just below it. And if we get below there, I want to get out and I want to get short. Theoretically, I mean, I'm still going to trade the opening range, but in the minds of most of you, but use these levels as your trade definition. I'm long above, short below, and if it's churning it, I'm flat. I'm not going to continue to churn a price.
Yeah. Yeah, no, I hear you. So, yeah, I'm kind of in that later camp, right? So I'm like, all right, it seems like a long distance from 53, where are we at now? 53.20
Mhm.
down to 52.43. But these days we know it's not very far, right?
Mm-mm.
So the retrace, right? The patient longer term swing trade is wait for that retracement. I think this is what you're saying. As you get close to that 52.43, pull the trigger and then come up with a reasonably tight stop just in case it breaks through that piercing line or that midpoint. And then all heck breaks loose.
Look, something I tweeted this yesterday. This is the largest ATR. I use a 10-day look back ATR. This is the largest ATR of forever. The ATR has never been this high. The average true range has never in history been this high. in the S&P. I don't know what it is in the NASDAQ. I haven't really compared it, but I'm sure it's the same in the NAS. If you're looking at regular trading hours, the ATR with the 10-day look back is 268 points. If you're looking at, my God, am I reading this right? In
So
in in the S in the all sessions, it's 300 points.
yeah. Yeah. So I'm just looking at a 14-day look back for the E-mini S&P. It's close to yours, 219 daily ATR. NASDAQ, 900 and 905 is the ATR for the NASDAQ, and that's based on a 14-day look back. That tells the story right there.
Yeah. So, if you're 80 points away from where you want to get long, wait. Chances are you're going to see that price anyway. And it'll give you a good dividing line. If we get through it, you can turn around and get short. I don't know. That's the way I trade.
Yeah,
But
no,
yeah,
I that makes
that's
that makes that makes a lot of sense. That makes a lot of sense. And, at the end of the day, the Order Flow Labs guys have a great strategy. What they do is they get in, they have a tight stop. If they get stopped out, okay, they try it again. If they have conviction, if they get stopped out again, no, it's a small one. They try it again, and then eventually, it happens based on what they're looking at. So that's another strategy that a lot of people use is, all right, just keep chipping away, trying to get in, trying to get in, trying to get in, and it'll break your way, hopefully. If
yeah.
not, then live to fight another day.
Jim, I've learned a lot. I don't know how traders do it nowadays. I learned a lot from the older guys in the pit that stood next to me. And I learned a lot from watching other people. I talk about, the famous Louis Borsellino and how much from Louis, I've told Louis this. I learned so much from Louis just by watching him walk, seeing his style and the way that he traded in the pit. Ross Deutsch, one of the best traders in the history of S&P traders that nobody's ever heard of. He won't be in any books. He's not in any articles. And he was bigger, better, and smarter than anybody else I knew. But one of his friends, Craig Gordon, stood next to me. And Craig was probably in his 40s, late 40s when I was 30. So he's 70-ish now. Anyway, Craig would always say, this is a young man's game. And he would turn around and walk out of the pit at 9:30, an hour after we opened. And I never understood why. We're so busy. Even if we were quiet, this is during the tech bubble bursting. So NASDAQ had 200, 300, 400-point ranges all the time. What everybody has to realize about that is that was the big NASDAQ. We are $100 a tick,
Yeah.
not 50. So, or a point, so,
Yeah.
this is young person. I feel like I'm the old timer now. Just this
Yeah.
is a young man's game. The one thing, the main point about that though is that Craig protected himself all the time. CGX protected himself all the time, and when he walked off that floor, with an ungodly amount of money, because he was there for the easy trades. He preserved his capital during those trades, and he didn't chase. He didn't try to create. He just let the market come to him, and he traded that way.
Yeah.
That is real experience, real
Yeah.
maturity, and real wisdom.
Yeah. So I mean, I spent a lot of time with Lewis in the late '90s. I was in the pit I got to witness Baldwin in action in the bond pit in the early '80s. But now the technology that's at our fingertips has changed everything, right? We have tick charts that are automatic.
Crippling.
You don't have
Crippling.
to you don't have to calculate your market profile anymore. It paints it on the chart. You have VWAP tools. You have time and sales electronically on your screen. You have Delta electronically on your screen. So now these younger guys, right? And I'm just going to refer to the Order Flow Labs guys. And also, Sarah's coming up next, and she's got a fantastic strategy too. Are taking that technology and that data and applying it in a real time trading environment and trading and looking pretty good doing it. So it's a paradigm shift, man, from me and you on the floor, like yelling at people.
I had people don't understand that I would that we didn't have access to charts. I stood in that pit all day long and made markets in the NASDAQ, moved the markets with my own money, and I traded this very similarly to what I do now. I knew what prices I was going to trade. When we got there, I knew that if 52.43, if I was short, I'd be taking profit, and if it held, I'd get long. I knew that.
Yeah.
I
Yeah.
had all of those cards written, all of those prices written down in my hand, just like I do now. And when I left the floor and started trading on the screens, man, I had
Yeah.
direct access to price on the floor. I didn't have direct access to charts. I had to walk off
Yeah.
out of the pit, stand in line at its CQG machine and print off a chart and take it back with me. On off the floor, I had direct access to price. I didn't create the movement. The algos did, HFTs and their algos. But I had direct access to price and I had direct access to
Yeah.
technology. And for me, that was crippling. That was very, very
Yeah.
difficult.
Yeah. Well, let's pivot over to the 30-year US Treasury bond right now. We had what I thought was a decent auction yesterday, and still the market, look at the futures market right now. I mean, we're literally tagging the February lows right now. I have a rectangle there kind of just showing an area of support so far. Yeah, we wicked through it big time on Wednesday. We wicked through it this morning already. But this market's not liking something, even with the decent auction yesterday.
No, it's scary. The 10-year auction on Wednesday was good too.
Yeah.
So that theoretically should have been should have been bullish. And we had, bonds, and we had a little bit of a discussion about that in my group. There were some good bond traders in there. But oh man, I mean it was shocking how hard and fast they sold off. Now, whether is it I'd like to hear Tracy's thoughts on it. Is it the basis trade continuing unwind, or is something close to breaking? Are people getting very, very close to blowing out? Are they blowing out, or is it the market starting to force the president's hand and the government's hand? Rates are not going lower. They're not going lower.
Yeah.
They're going higher. It's scary. It's not scary. It's concerning. And
Yeah.
what's even more concerning is the huge run up in gold.
Oh my
This
goodness. Yeah, I'm going to pop that. Before we move over to gold though, folks are head folks, funds, the big players, tend to want to hedge, the longer term treasuries in the swap market. But there's only so much you could do there before before you're going to get margin call, before you have to start liquidating, because when they go into swaps, they're relying on the SOFR market to change, and it doesn't change as much as the 30-year changes.
right.
So they're getting margin calls, they're getting out. That's what's happening there in the treasuries, I think. But let's shoot over to gold right now.
So yeah, are they would they hedge in gold? Uh would this be a flight to safety trade with gold running up another $100 in the last couple of days?
I mean,
Buy, sell them off.
I'll give you my opinion. I mean, I'm going to defer to Tracy, but my opinion is yes. I mean, it's finally kind of acting like, it seems like it's acting like that, right? It doesn't matter. We had a rally in gold when the S&P went up. We have a rally in gold when the S&P goes down. Money is going into this market somehow, some way, whether it's central banks buying or funds or individual investors. But there's no doubt about the fact that what are we tracking here? The high today, Pax, was
32.40 something.
32.55 spot 9. I mean, we blew through the previous peak here we saw last week. When we hit that 3,200 level, and everyone was like, "Yeah, high fiving each other." We hit 3,200. We're still going, and we
Yeah.
have targets on the upside too. 32.94 is my next stop up.
32.74, 32.94. Yeah, 32.74 above that. So we got targets every 20 bucks here. It's fascinating to me. Ira Harris is one of my great mentors, and he's a wonderful man and a great friend. He's the best macro trader that I know. He's just a phenomenal person. So Ira always, one of Ira's sayings is, well, he's got two great ones. One is, if you come to trading with a big ego and a lot of money, you will soon leave with the big ego. And isn't that a great line? That came from his mentor, Lenny Feldman. So, if you're smart in this business, then you'll know who begat whom. Like in Chicago politics, your clout begat this guy, begat that guy. So, I learned from Ira Harris, who learned from Lenny Feldman, and he was a contemporary of we're going back to the 30s and 40s now. Anyway, the point is that big ego and a lot of money soon leave with the big ego. And the second one I think is important in this context is that gold is no longer a hedge against inflation. It's a hedge against the Federal Reserve losing control of the monetary policy. And that's, I wonder if that's what we're seeing. Losing
Yeah, I
control.
don't know
Right.
about the latter. I agree with the first part for sure. Like, you saw that CPI print come out yesterday, and it was, it was good. And so now we have,
Mhm.
we'll have PPI in a couple minutes here, and we'll watch the market, see if it moves around on PPI, if there's any surprises there, and then Tracy's going to explain it all to us at 10 o'clock. But the Fed, I don't know. I think the Fed is. Um, I think they know what they're doing. I know a lot of people like to
Geez, I
pick on
hope.
them, and I think they do. And this Fed funds tool at the CME group right now is tracking 30% chance of a 25 bip cut in the next meeting, which is what is it? It's May 7th, and that number's been moving around. You could chart it like like a chart. It's been moving
Yeah.
around all over the place.
What about June? What's Fed Fund saying about June?
All right, so the June numbers are 61.8% chance of a single hike. Now, the number that's more important than that is because there's some lower expectations as well when you look at that grid, but there's only a 12% chance we're not going to have a cut, any cut in June. But for just a 25 bip, it's 61.8.
Hmm. Wow. Oh
Yeah.
my Lord, that is, that's interesting. That's interesting.
Yeah.
With
But I
the
think you go
10-year and
further
30-year.
out. Yeah, you go further out on this on the Fed funds, CME Fed funds thing. It's just too far out. It's such losing its predictability.
Uh, it, the whole thing is just so fascinating, and it's got some of the best macro minds in the world befuddled and confused. And it for us, for traders, it presents some great trading opportunities, there's some huge trading opportunities as long as you minimize and manage your risk. This is this isn't rocket science. Going back to the point that we were making earlier about walking off the floor and having all of this technology at our fingertips is, the more things change, the more things remain the same. And one of the things that I discovered is that I thought I didn't have enough information, enough knowledge. I need to understand RSIs more, or stochastics, or Elliott wave, and so I started to devour all kinds of information when really I saw that the algorithms are doing the same thing that we did on the floor. It's just different entities. They're creating price momentum, filling out the charts, and looking for the market to move one way or the other to make money. Same thing that we did. So, I need to keep it simple, and I need to look for tradable opportunities. That's it, and manage my risk so that I can be consistently managing my profit, and then I can learn how to exploit it. I can learn how to add to positions, but learning how to add to positions without significantly adding to my risk. That's ultimately what is going to give us the ability to become free in this business. Trading really ought to feel like we're cheating life. Like my brother Pat is every Irish Chicago trader has a brother named Pat or Sean that is a Chicago cop or fireman. So my brother Patrick is a Chicago police sergeant. He works. That kid works for a living. I'm in my
Yeah.
house wearing Lululemon
Yeah.
sweats, and I've made a
Yeah. No,
lot of
I
money.
hear you, man. It's funny you should mention that. The risk manager at NinjaTrader's name is Pat Shaughnessy.
Yeah.
So I know what you're talking about. But do you ever trade the Nasdaq? I have a 10-minute micro Nasdaq chart on the screen right now with just a basic volume profile and an anchored VWAP from the session open. We don't hit, the session is not open yet. From the set, the Globex open last night. That's that white line going all the way across here right now. Do you ever trade the micro Nasdaq?
No, not micro Nasdaq. I don't trade Nasdaq so much either anymore. There aren't too many traders that have traded as many NASDAQ for their own accounts as I have, and I barely trade NASDAQ. It's too jumpy for me.
Oh yeah. Okay.
It
Yep.
puts me, I'll have, the NASDAQ gives us bigger moves, bigger percentage moves, but I'm going to have bigger expenses, or, losses, what most traders call losses. So my losses will be more, or my expenses will be more in the NASDAQ, but I'll make more in the long run. For me, that is, I have discovered on the screens, when I take bigger expenses, I have a tendency to start to become emotional about my trades, and I want to get that money back. I don't want to be down, a few thousand or whatever. And so,
Yeah.
I started the trade because it puts me in a position of chasing, and I don't want to do that, or a mindset of it. So I don't know, in
Yeah.
14 or
No,
15, I started to trade S&P primarily, but I'm prepared to trade
okay.
NASDAQ every day. I do levels and
Okay.
targets for it.
All right, so I'm gonna make one comment on this chart, and we'll pivot to the E-mini S&P for the PPI number to see what kind of movement we get there. But right now, I'm digging this VWAP right now. We're just bounced right off it perfectly right now, kind of waiting for the next piece of information to hit the market. Let's see if we have the same kind of setup here with the E-mini S&P. And yeah, it looks like VWAP is holding here. At least recently, right? Overnight, we traded up through it, down. But as more data accumulates in the marketplace, this VWAP becomes more and more important for folks that like to use this
Mhm.
as a trade idea. So, and a lot of people do. I do. I've grown fond of it. And Anthony Crudele actually turned me onto it, and he anchors his from the open going forward. But since we're not open yet, I just thought I'd anchor it from the Globex start.
It's interesting. Look at VWAP today is at 5303. Is just 2 points above my
Yeah.
5305 targets that I've had since March of 24. What was NASDAQ VWAP for the day? Can you put that NASDAQ chart back up?
Yeah. That
Yeah,
is
18,500.
18. Yeah, a little short of that, but you're right. You're right. You're right.
Yeah, okay, it's interesting. Yeah.
Yeah, so it's funny how sometimes, two traders will have a different number, right? Whatever your method is for getting your numbers, your method. So two traders have different numbers, and when they're the same, it's like, okay, this isn't magic anymore. Jimmy Urio told me once, technical analysis is not voodoo, and I think he's absolutely right on that.
The Margie Teller was the biggest independent trader in the history of traders. Biggest retail. I don't know what that means, but the biggest independent trader in the history of independent traders. She was, was 10% of the daily NASDAQ volume. She was 10% of the euro dollar open interest. That's unbelievably huge.
Yeah. Yeah.
So anyway, Margie had said to me and a bunch of other traders one afternoon, you all have, you're all looking at the same market profile. You're all looking at the same moving averages. If your technical analysis is any good, then your levels are going to be similar. What makes you different to you, to you, to you, and to you? And that stayed with me. I've thought about that. I thought about that a million times. I still think about that. What differentiates me from somebody else that's looking at the same levels or the same, I don't know, the same profile or
Yeah.
and a large part of that is going to be how I live, move, and have my being. How I live, breathe, and have my being. What is in my heart? What is in my soul? How do I take care of myself, mind, body, and spirit? That's what's going to separate me from other people, not my ego. Because I'm telling
Yeah.
you, I'm not kidding. I'm telling you, you will blow up because of your ego. You think you're better than the market. You think you're bigger than the market. You think you're bigger than you are. You'll be driving Uber soon. Not that
Well,
there's
I
anything
think
wrong with it.
no. I mean, humility is even elite athletes. The ones that have humility are the ones that tend to do better over the long run. That's a trait that I think a lot of professionals have, and good professionals have and need to have. And by the way, though, I do want to do a shout out to the Lieb. The Lieb is here. I haven't seen you in the new show yet. Only probably because I'm not paying attention, but appreciate you being here with us on NinjaTrader Live. He's been with us for years now, so it's great to see the Lieb here in the chat. So, anyway, sorry for that sidetrack there, Pax.
No, 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 perfect. Yeah. No rosary today, life hacks. I'm in here, and then we got PPI. Maybe we'll pray the Psalms at 8.
Good Friday's next Friday, I think.
It is. Passover's tomorrow, isn't it?
Yeah. Yeah.
Happy Passover, my brothers and sisters.
Yeah.
Happy Passover, and then yeah, Holy Week for Catholics and Christians next week. Oh, we
Yep.
have
Yep. Yep.
PPI. So let's make note of where we are right now.
Yeah.
Liquidity's drying up. S&P's at 53 quarter. NASDAQ's at 18,560. And bonds are at 113.12. 10-year is where, oh, God, too much thinking. I don't have my
Here we
10 years.
go.
Oh, too late now. No liquidity. Velocity logic kicked in. Velocity logic froze us up for a second. Circuit breakers already happened. Okay, now liquidity's back in. Trading has resumed. Velocity logic is something that kicks in when there's no liquidity and prices moving too fast.
That was a brief one though, because we're rolling
Yeah, it
right now.
was.
So 53.35, 53.40 half. It hit the top of that first standard deviation band for the VWAP and just bounced right off it. Right at the pivot. The daily pivot is kind of at the midpoint now of the latest candles.
That was crazy. There was absolutely no bids and offers in the S&P, just like the NASDAQ. Shut it down. That was crazy to see.
Yeah.
Now it's
I
just
mean,
it's two contracts up. It's two cars up. Look at the on the dome. On the domes, it's five up, two up, two two on the bid, one on the offer. And NASDAQ is 10 points wide.
I'm gonna pull it up here. Yeah, Nasdaq's always got a. There we go. This is the Nasdaq. There's the Nasdaq dome, by the way, on the screen. It's really hard to see because it's just so the bid-ask spread is like 5 or 6
Yeah, 10
ticks at
points.
least.
Yeah,
10 points. Okay.
it's gonna cost you 10 points to get out to get in. Look at
Let's
the
shoot
S&P.
over to.
The S&P's two up.
Yeah,
31,
that's
31 and 2 at 35. That's remember in the euros or in the bonds, you would quote, like if it was twos or trading, you would quote one bid at 3 to Jimmy Iori. When Jimmy was worked for Citibank and he was one of my customers, I was always careful with the markets. I quoted him. One bid at 3, one bid at 3. That's, and then when the market would tighten it up, all right, twos trade, two bid small. That's what this is. Right now, if I was a clerk in the S&P, I'd be quoting at 53 quarter bid at 53.35 quarters of trading. NASDAQ would be, when I was in the NASDAQ when we were busy, we'd be 10, 20 wide. That's what this is right now. Give me a bid. I'm 55.65 bid on 20.
yeah, yeah.
20
That's
at 80.
crazy. That's
It is
crazy.
crazy.
I mean, it's not only that. This thing, even the S&P is bouncing around so much that anything in the order book doesn't survive very long.
Mhm. Right. Yeah. Right.
It just gets it's just swept. It just sweeps through it, and this is what we're seeing right now as this market tries to figure out what to do. We also have that 10 o'clock Michigan number, I think, which is sometimes it's not a factor, but my guess is today it's going to be a big factor.
Yeah, it's interesting. I'd like to hear Tracy's opinion on the Michigan sentiment is going to be bigger, right? I mean, at 9 o'clock, or at least market, potential market moving. I don't care for anybody looking for a discussion on what the PPI number came out on. That's not my bailiwick. I don't I don't really pay much attention to the actual numbers of things. I pay attention to where we were trading, and what the market is doing, and then I can tell whether or not the number came out well or not. The bonds are still right where they are. They haven't really moved. Gold rallied and made a new intraday high, and the indices, Nasdaq is a little bit stronger, but the S&P is back to where it was. We're trading at 53
Yeah.
quarter. It's at 29.
Yeah, I mean PPI today. This is a case of good news is bad news, maybe, right? So we have this really, really sweet, better than expected numbers that came out, and now traders are going to think like, oh, that means the Fed's not going to cut interest rates, so we're selling this off. It's a weird thing when you have good news, becoming bad news and pricing for the stock index futures.
So Tracy said that the Michigan number at 10 o'clock is going to be, it'll be important.
Yeah.
So there we go.
Yeah.
Something, in regards to position management on a number like that, if I'm long from the opening range, let's say the S&P opening range is 53.20, and I'm long at 53.20, we trade up to, I pay for my trade at 15 points and then I take profit, on another quarter someplace. The number comes out at 9 o'clock. I don't flatten. I'm keeping my position. I've got my stops in for a scratch. I paid for my trade to remove my risk. I've taken something off to put some money into my pocket. I have no reason to get out of that position. I've got scratch stops in. I'm going to scratch out the trade. I can't lose money. Maybe my stop gets run a little bit. That's another thing too. Please make sure that your stops are set to stop market orders, not stop limits. They must absolutely be stop market orders. 100% of the time.
Well, especially now. I mean, you could get jumped, right? So you can get, all right, we didn't get a fill when you thought stops were guaranteed. They're not. On a stop market, basically they behave like a market order. So when the price touches your stop, it just gets you the best price as quickly as it can. Maybe you'll get some slippage one way or the other, maybe not, but at least you're gonna get out.
Yeah,
And by
right,
the way, for
right.
folks that are kind of new to this and in the chat or just listening, when Pac says scratch a trade, that means getting out at or near this exact same price you got in. In other words, maybe you were profitable for a while and it comes back out. You move your stop to your entry and then you get taken out. It's a scratch, right? And that's probably not the most articulate way to say this, but a lot of people ask me, you guys use some nomenclature we don't know.
Oh, okay. So there's like the way that I view things is that there's two different. I should be more specific. You're right, Jim. There's two different. I use three kinds of different stops. So if I buy 20s and the market goes off it, I'm going to take an expense. So that's going to be a stop loss. Then there's going to be stop scratches. If I buy 20s, I pay for my trade, I take profit on it, and it comes back down, it scratches me out. I buy 20s, sell 20s. Now I can use a break-even stop too. So I buy 20s, pay for my trade at 30, take profit at 40. I've just locked in 30 points of profit. I can use that 30 points of profit as a break-even stop and put my stop in 15 handles below the market to give the market some wiggle room. So, for me, stop loss, stop scratch, stop break even. But always stop market orders. To define that, some of you are going to have stop limit orders. So if you buy 36s, 53 36s, and the market rally or you put in a 36 stop limit, once it touches 36, even once it sets off your stop, but you're stuck at 36. It won't sell anything underneath it. A stop market order will become a market order the second it's touched. It's an MIT order. So a market if touched order. So if it trades 36 once, then that stop becomes a market order. Now your stops could get run, but at least you're guaranteed an out. Even if you buy 36s in a non-liquid event, or you've got a 36 stop in a non-liquid event, you might sell 30s, but at least you're going to sell something. You don't want to be stuck on the offer. The market's breaking 100 points. You think you're protected with a stop. You come back and you're just sitting on the offer at 36 and we're trading at 52 even.
Yeah.
Your account's blowing. Get out when you can, not when you have to. That's a situation where your firm is going to get you out.
Absolutely. So I just pivoted over to gold really quickly. Thank you for that, Pax. I appreciate that. We take for granted that people know what we're talking about sometimes, but
Right.
I kind of just shot over to the gold market just to see what happened on the number. We're back to where we started from. We had a little bit of a wick on top of that 10-minute candle that I'm showing. We are trading above the first standard deviation band on the VWAP. We were between the first and second standard deviation, and they are starting to angle up a little bit. So that's a little bit bullish, but we have a really nice level of price happiness here on the volume profile at 32.35. And what's happening now is though we're starting to develop a little bit of a volume node up here at 32.45. The first number, I'm sorry, was 32.35. The second number is 32.45. So we're starting to develop a little bit of volume here. So we'll see if that volume accumulation happens, shifting up that point of control a little bit higher as we go forward here. But boy, this is looking strong. I see R2 up here, which is one of those pivot levels. R1 is kind of framing the support down here along with VWAP. R2 is going to be a target if we break out through this target wick, which is about 32.56. I think that's what I'm thinking right now.
Mm. Isn't it just this price action in gold is crazy. It's just
Yeah.
absolutely crazy. What, oh
Yeah.
man. Um
Let's take a look at the treasuries too while we're at it. I'll throw the 10-year up here just to see if that did anything for this for the number, and doesn't look like it. Although actually this is a pretty big wick for a, let's see, high to low for a 10-year. This candle's not over yet. High to low was 110.14 versus 110.08. And this is the 10-year. It doesn't move as much as the 30-year. But yeah, it was just we're just hovering right at this point of control. It's a dominant point of control right now for the 10-year notes. We'll see if anything happens. The other thing that's interesting here, Pax, is that we have a volume deficit, like a cliff almost, right around 110.06 half. So that's another area of support that I'm going to be looking at later on today.
yeah, that was a a stop event. They ran stops, no volume on it, just sold everything off. That was crazy. Same thing. I'd imagine the bonds look the same, headed down to the overnight low at 112.19.
Let's check it out.
Yeah.
Did you ever look at the ultras out of curiosity?
Anthony had me a couple years ago. Anthony had me. Oh, yeah, they're the greatest thing in the world. Got to trade them, and I did, but it traded, it traded too much like the S&P. It traded
Yeah.
too much like the S&P. I'm too used to trading the bonds, so I wanted to go back to the 30-year. But it was just easier to trade the bond futures. The ultras were just, it. See, it's a mindset issue. What separates you from you from you. For the
Yeah.
S&P, I'm prepared to trade that kind of a market. When I'm trading the bonds, I'm not. I don't know that I have the bandwidth to be able to trade markets that move that quickly, that fast all the time. 30
Yeah,
years
no,
is
you're
great for
yeah.
me.
Yeah, you're absolutely right. You're absolutely right. A lot of people love them though, but
Yeah, they
I'm
do.
I'm 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 with you right now. You get a little more volume too in the 30-year, right? Right now we're tracking 202,000 so far on the session. The Ultra bonds, that's UB is the symbol for those of you interested. That's the true 30-year bond, meaning that the duration is closer to 30. 162,000. So it's still really good volume, but not quite the same.
No, it's a great, and it's fun to trade if, for, I think, I don't know, it's a young person's game.
I know. I know.
Truly.
I know, I know. Kaz, Mark Biscata's here, and Griffin pops in and out usually in the afternoons. Kaz, so which is great. It's great to see all the folks, the old timer folks who were with us before we amped up the volume, so to speak, on NinjaTrader Live, and brought in some exceptional powerhouses. So appreciate you guys being here with us today for sure.
Yeah, always. Anybody that's ever watching us I'm always appreciative of it. I'm not gonna, nobody's putting my gigantic head on CNBC. I'm not gonna sound like these people. I'm a trader. I'm not, uh, you know,
Uh,
I'm not,
I, I,
I'm not
I
an
know.
analyst. I'm paid to think. I'm paid to react. I'm not paid to think. So, I can talk about reacting to what the market is doing, but I'm not going to sit there and give a detailed analysis to what the market can do 35 different ways to Sunday. I just want to know, we're going higher, lower, or nowhere. If we're going higher, I want to be long from where. If we're going lower, I want to be short from where. If we're going
Yeah.
nowhere, I want to be flat from all over the place.
Yeah, I'm with you. I'm with you on that. I'm trying to avoid it. Believe it or not, I'm trying to avoid the spotlight.
Somebody
Uh,
said, Pax, great to know you. Had dinner with the traditional Catholic last night and he knew your name right away. Well, hopefully he liked me, Burgoyne.
yeah.
Isn't it fun?
Oh my goodness. Anyway, all right, this is interesting, kind of open. Let's just kind of pivot back to the E-mini S&P for a second. We're up 30, up about 0.5% right now. And the charts kind of fool me sometimes, Pax, because it looks like, just kind of, if forget about the numbers for a second. You see a chart like this, you're like, oh, it's range bound. It's a tight day today. But then when I did the math, we have this tool on the software that lets you kind of measure distances. And we have 173 handle move so far. So the deception is when you kind of move your axis up and down, and you're like, wait a second, this is a bigger day than I thought when it was just all squished together right here. So it's just startling to me when I see these ranges that are so big.
Thanks for pointing that out. Just today, just April 11th, we've had 1, 2, 3, 4, 5, 6 100-point reversals. So yeah, 100. We've had six reversals. Oh no, never mind. That's a 50 by 3. Oh my God. Never mind. We've had 3, which is still significant overnight. It's crazy.
Oh, yeah. It is. It is. It is. The beauty when the CME first came out with the micros, I was like, come on, you guys. At first I thought it was like, oh, this is a money grab. This is no good. What are you doing? And but they proved me wrong, right? So this is a case where depending, again, you got to be careful on the amount of leverage you use. You don't want to over leverage ever, but the micros are, 1/10 the size. So now you could have different kinds of strategies as well. You could scale, you could, hit your numbers and add to positions, take profit, scale out of positions if you're taking profit. So all of those things all of a sudden become additional strategies that somebody could employ, and the liquidity is pretty good on those micros. So I know you probably trade the classic, but just
Well,
kind of a plug for the micros. I'm a super fan now.
okay, I am too. Okay, I am too, for a lot of reasons. But there is, one of the other things that we do in the PAX group is trade the minis and the against the not trade against, but trade the minis and the micros sort of in a spread. So if you sell a 1 lot in the S&P, you've got 10 micros to trade out of. If you sell a 2 lot in the mini, you got 20 micros to trade out of. And if you trade a 1 lot or a 2 lot in the minis, you have to be right. You're going to take 10 points out of a trade, or 20, 30 points. But if you scale out of something, you're going to take hundreds of points out. So if you sell a 2 lot at 53.24, you pay for your trade with 5 micros. I trade out in quarters. So buy 5 micros. You're short 2, long 5. We get down to another level. You want to take a little bit more off the table. You buy a couple more micros. So now you're short 2 minis, long 10 micros. You want to add to your position? Take your micros off, take the bad leg off, and let the minis run. Then pay for them, take profit again. When you become perfectly hedged, let's say you got 2 on, you're short 2, long 20. Now your P&L is the same, but the market takes out a major level to the downside. You sell out the micros, and now you're short 2 from 150 higher, 200 higher. It's a great way of trading, and you'll make more money trading the 2 lot, 20 lot micro spread, or 1 lot, 10 lot micro spread than you will trading 1 lots and 2 lots. And you'll cut down on your commissions. If you're trading 10 lot mini micros, you're going to pay a lot of money in commissions compared to a 1 lot mini.
Yeah, the interesting thing about that is, before the micros, you could not, as an example, like you can in over-the-counter Forex sometimes, you cannot be long and short the same market at the same time.
Well, they're not fungible, right?
Right. And now, because you'd be flat, right? But now you can, right? So now you could, like you just described, you could be long a classic. I call them classics, the big one, and then you could be you could be short 5 micros, just as an example. And there's no rule against that, right? And that was a big aha moment, because I was thinking,
Right.
well. And even if you carry it overnight, it's the same. You're not flat. So you might be flat if it was, long 1 and short 10, but you still have the positions. You still have to manage those positions.
Yes,
Yeah.
they're different markets. They're considered different markets. So, you're going to be long 2 short 10, or you're long 2 short, whatever. You're short 2 long 10. Your minis P&L is going to show you up a bunch of money, and your micros are going to show you down a bunch of money. So that actually teaches you about proper account management. So you're not, if you sold a 4 lot, 4 minis, and you bought one, you're short 2, you're not down money. You've locked in profit. Your P&L is going to show you green. And that's kind of a tricky thing to do. Learning how not to trade the P&L, but trade the price action. So you're short 2, long 10. Your long position is going to show you down money, but you're not down money. That's profit that you've locked in. So, it's a very interesting way to trade. And I don't know that too many other people trade it like that, except for the traders in my group. And they've made a lot of money doing it with, especially in these markets with higher margins. Some of the traders that trade 6 lots or 8 lot minis during normal times are trading 2 lots and 3 lots. So they trade out micros. So I think it's a good way of trading. I'd also like to talk a little bit about yesterday's NASDAQ limit down move.
Yeah.
That was crazy. Did you guys talk about that in the afternoon feed, and explain that to everybody?
We did, and Anthony had a really good. Anthony did a couple of formerly known as Twitter posts on this particular issue, and people are like, "Why did we wick through? Why
Yes.
did we wick through limit down?" But go ahead and explain it for everybody.
So yesterday's downside limit was 17,948 and a half, and we came down there. The CME has changed the rules sometime, and Anthony and I could not figure it out. Anthony and I spoke yesterday probably at least 5 times, definitely 4 times. We were both trying to figure out what had happened. So in the old days, up until I think around COVID is when I'm going to guess that's when they changed it. You came down to the limit. We had to be locked limit offer. So we came down at 19,948 and a half, and we got to be locked limit for 2 minutes. Locked limit for 2 minutes. Then we close for 15 minutes, reopen with the 13% limit. But they've changed it, I believe, at the behest of like the HFTs that kind of control things, the jump tradings, the DRWs and things, Doogie, Donnie Wilson. We used to call him Doogie because he looked like Doogie Howser. He was 16 years old. He was a 16-year-old looking 40-year-old, Anyway, so now he's a billionaire who looks like a millionaire. Go figure. Just kidding. Donnie's a great guy. So anyway, the micros, not the micros, the minis traded down to that level, and the timer goes off now. Okay, so the 2-minute timer doesn't start when we're locked limit. The 2-minute timer starts when we trade it. So we traded it, we bounced 50, 60, 80, 100 points. And then after 2 minutes, we came back down to it and traded through it. That threw me for a loop. I wasn't prepared for that. I thought we go down there, lock for 2 minutes, then they, close for 15 minutes and reopen. What I still have a question about is, so that timer goes off, you trade it, the timer goes off 2 minutes, we don't lock, then now we have a 13% limit. So they expanded the limits to 13% during that. What I have a question on is that the NASDAQ limits expanded to 13%, but the S&P was still at 7. Me and Anthony still had not got an answer on that yet. So if the S&P limit was 5109, I believe, and we traded down to 5140. Now there's also some correlated aspect between the cash markets, the NDX for NASDAQ, and the SPX in the S&P.
Yeah, by the way, there's a lot of conspiracy theories like, oh, we hit the 7%, and all of a sudden we just rallied like crazy. But that's I don't subscribe to the conspiracy theory there.
I don't either. There's an arbitrary component to this that that wasn't there before. The limits were as published by the CME, and that's it. This is really important for all of us to know, because what I think that is difficult to grasp for a lot of newer traders that have never traded a limit down market is you don't want to be long at it. You don't want to take a long. Now, yesterday's bounce off of it for 2, 3, 4, well, now almost 1,000 points is going to reinforce the, get long down near the limit for people. And when we have a true limit down market event, they're going to be stuck long, and we open at the next limit with the 13%. They're not only going to blow their lives up trying to buy these dips, but they're going to hurt their firm, and they're going to owe their firm a ton of money. So just stay away from the limit. If you're short going down to it, take profit at it, lighten up. I've traded through 50, maybe more limit events in the NASDAQ in my career, and also in the hogs when I was in the hog pit too. So just be very, very careful.
Yeah, but remember though, I mean, you've had a long an illustrious career. They're rare events. I don't want to freak
Right.
anybody out. I
Well,
mean, they're rare events, and so when you
they are.
have this, almost black swan events, right? But where something happens that, no one anticipated, and all of a sudden you have this really dramatic move. So, and we're talking about percents too, right? Percent, in 2008, when the E-mini was trading at 1,000 is a lot different than, the point swing when the E-mini S&P is trading at 5,000 or
Right.
6,000.
It's true. But you're right about the black swan events, and I don't want to scare anybody. I just want to make you aware. What can go wrong will go wrong. Always, always, always expect and prepare in your trading. Always expect and prepare for those black swan events. I've been on the other side of most of those black swan events. Um, or outliers. I've been on the other side of most of those outliers in my life. I rarely caught one, to be lucky on it. Now, except for the limit moves, I trade those very well. I trade volatility very well. But the um uh the point though is that prepare for the unexpected. Always be prepared for the unexpected, because I can guarantee you that in your life you will experience and trade through unexpected events. That's so. Just I don't want we don't want to scare anybody, but we
But
just want you to be
yeah,
prepared.
but the best way to prepare, be sure you have your stop in. Don't just wing it. You got to have your stop in on every single entry, every single position, no matter what. Even if you're not sure where that stop should be and you need to make it a little further away until you figure it out, get it in.
I can't believe the amount of traders that trade without stops. Twitter's been quiet lately, or X has been quiet lately, and I'd imagine it's been quiet because all of these cocky, arrogant people that don't trade with stock with stops, I'd imagine have blown out, or
Yeah.
I don't know. I hate to think like that, because I don't like to think of pain. I don't like to think. I've been there, man. I mean,
Yeah.
I talk about people that have been worth 10, 15, 20 million dollars that have gone broke, and I'm telling you, I cannot count the amount of people that I knew that had that kind of money. I mean, I can't. 100, 200
Yeah.
more,
Yeah.
300
Yeah.
more. And I was one of them. I'm telling you, I know how fast it can go.
Yeah,
So
get them in there, man. So,
good.
but kind of back to the E-mini S&P, but real quick. We're getting close to getting Sarah in here. Um, we, we're trading close to that 5,300 level. We're at 5,309 right now in the SPOOs. We're just touching that VWAP now. This is the session VWAP, not the open VWAP. And I have a short-term area support right at that 5,300 level. That's that little rectangle down there. And then when you go further overnight, this was right after that sell-off we saw in the London session. We kind of hit a bottom right here around 52.70. So what I'm looking at is if we kind of like have a candle close or any significant penetration below that VWAP, there's some really nice targets on the downside that we should probably consider.
Absolutely. There 52.43 would be a nice level to look at. Underneath 52.43, then we're I mean, we'll be 100 lower pretty quickly. If we get underneath 52.40, yeah, we could be 100 lower fast. So just be careful. Now, look at the opening ranges. If you don't trade the opening ranges, you're going to trade with Sara, who's a great trader. If you're going to trade with Sara, then follow her and do what she's doing, but use the opening ranges and don't fade them. Use them to give you I'll post them on Twitter. Use them to give you long above, short below, not bias, but just trade with the algos. Bonds are selling off again, and the 10-year selling off again, and that is concerning. That is very concerning. Yeah, if we take out, I want to make this point. Um, Everybody take a look at yesterday's low, 112.20. We take out 112.20 in the 30-year bond, then um, my tweet from last night stands. It looks like something is breaking.
Look at
Not
that
the
112.20 is right by S1. I love it when you throw a
Yes.
number out. It's by one of my favorites.
Yeah, me too. Well, if your analysis is any good, we're going to have similar numbers. So what differentiates us as traders, right?
Yeah, yeah.
In our
So,
hearts, how we live.
Pax, man, I love Fridays with you. I appreciate you, spending time with us, man. I really do. The information you're giving us is awesome, and you got a lot of experience behind you, man.
Thank you, Jimmy. I appreciate it. And it's been a lot of fun. I really have a lot of fun talking to you every Friday. I look forward to it. Capital Preservation Friday, guys. If you had a good week, don't blow your week trying to be a hero today. If you struggle this week, don't try to make it back. Don't chase it. Just let it sit. You got plenty of trading ahead of you. This is a marathon, not a sprint. God bless you all.
Same to you. Same to you. You have a great weekend. Happy Holy Week. We'll talk to you next week for sure. Pax, so take care. Thank
Thank
you
you,
for
guys.
being with us.
Trade them up.
So we're gonna move into the trade the open segment, and we have Sara the Strat Sniper with us live in the studio, and she is going to be trading the open right now. Sara, good morning.
Good morning, Jim. What a week. What a week. Man,
Oh,
I
yeah.
want to talk about that for like the first probably 15 minutes before I even talk about charts.
Yeah, no, I'm looking forward to listening. You know, this has been a unique situation for everybody. We're living in historic times right now, and you know, I just want to see how the Strat handles this Friday, because it's you know, we're not, a lot of times Friday is like a nothing burger. I don't think it's going to be the case today.
Today might be a nothing burger. If we stay inside days, there's not going to be much to do. There might be little baby broadening formations that we can trade, but if we can't break yesterday's lows or highs, I'm honestly not too interested in anything, which kind of sucks for a live stream, but as traders, every day is not meant for trading, and sometimes, you know, when to not press the buttons is more important, because otherwise you'll just get chopped up. So you have to be kind of disciplined in your setups and your trade plans. If the setup's not there, it's not there. It's not there every day. I know the volatility's been crazy, which we're going to talk about, and we're just going to kind of see what happens at the open. We're going to start with the higher time frame views and get into the lower time frame views and then see what we can see. But again, I'm kind of not expecting a ton for today. And it just is what it is, you know. Like I said, every day is not meant for trading. So
Yeah,
we'll see what happens.
will find
but
out.
I
I'm sorry, I cut you off, Sara. I'm sorry.
No, you're fine. I was just going to say I do want to go back to kind of Monday and Wednesday, because those were the crazy days, and I feel like everybody I feel like kind of felt the same way. I feel like everybody felt like they missed the big move, and that's okay. You know, as strat traders, we love volatility, and volatility is what makes things move, but it gets really tricky and a lot harder when there's so much headline risk, and a tweet can just, you know, as you saw on Wednesday, just explode. And I heard you guys talking about stops just a little while ago, and it's so important if you're trading, especially futures, that you always have a stop in place. Especially right now, things are just so volatile and crazy, and there's so much going on economically in the world that you have to have stops. You will blow out if you don't have a stop in.
Yeah.
So we can talk about that too.
All right, awesome. Well, listen, good luck today. Everybody in the chat, smash that like button for Sara. I'm going to step aside here and let you do your thing and be watching the whole time. So good luck today.
All right. Thank you, Jim. Okay, so let's talk about the market for a little bit. Gosh, such a crazy week. We're going to do a little chart replay, and we're going to go back to Wednesday. Hold on. I want to move my line because this is important. So this is, and I mean, there is a strat reason for everything, and like everything makes sense, but I'm going to be honest with you. I struggled this week myself because my bias was to the downside for the outside year targets and SPY and QQQ. And I found myself kind of overly caught up in my bearish mentality, and I didn't see what I should have seen. And that's just kind of, you know, part of the game. And I did miss this giant move, and I didn't feel FOMO. I felt frustrated. So I closed the computer and I went outside and sat in the sun. I was like, man, but we can't beat ourselves up. We can't expect moves like this. This was like a historic move. So we can't beat ourselves up. We can't be in front of the computer 24/7, you know. So if you're feeling like, oh, I missed it, and you know, da 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 da, it's fine to miss things, and the market gives us so many opportunities every single day that we don't have to worry about missing something like that. Like, again, this was an unprecedented move. I think they said it hadn't happened since the financial crisis, or even maybe before that. So it's just crazy. So let's go back. We're going to go back to Wednesday. Okay. I'm going to make this screen big. So we had outside year magnitude, which for SPY, which is somewhere down here. I don't know exactly on ES because ES already triggered the year 2 down, but we were looking at SPY as well. So if we go to the day, this is a perfect strat setup because you have a failed 2 up. So this is a 2 up in red. And then we would look to short below here and target here. And then the SPY outside your target, which was just, it was literally like we came within 3% of hitting last year's lows on SPY. So I was in puts on this day and everything was going fine until the tweet. And then my puts pretty much instantly went to 0. I was like, cool. So we're gonna go back in time. We're gonna see the trigger and the target. Now the thing about the strat, if you aren't below this candle's low, that means that the trade is not in force and it's no longer actionable. So we have something that I've kind of coined, which is the take action window, meaning from your trigger to your magnitude. So this is the target area. And then again, it was a little lower because of the SPY outside your target. But for this, we're just gonna stick with this magnitude, okay? So this is the daily view. So you had a failed 2 up, which in technical analysis terms, this would be a bear flag. So you would expect a short, right? So what happened though? If you get into the lower time frames, and I should be able to show you on all 4. Hold on, I'm feeling lost. Hold on. It was here. Actually, it was here and here. Okay. And I can pull up the strat cheat sheet to help identify reversals. So what happened on Wednesday on this candle, the 7 a.m. candle, the day, because this white line, this is our short window. The day triggers to the downside. Okay, then we get a 60-minute flip, and all a flip means is it's a new candle opening, and we are very cognizant of when things happen and when new 60 candles open, because especially in volatility like this, every 60-minute candle can be like a new day, and every 60-minute candle can change continuity, like intraday time frame continuity, where we can go, you can see red, 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 new open, green. So they're buying. So right here on this inside 60 and up, this is a 2-1-2 reversal. Right here, so if you were short, and again, I goofed up because I was like, I'm not exiting unless we go 2 up on the day, which we ended up doing really fast. So right here, if you were short, this is a 2-1-2 reversal. Let me pull up the sheet for you. Because if price is going to continue down, it cannot do this. You do not want to see it go 2-1-2 up. Okay? You don't want to see it go inside bar up. That is against your direction. So right here it did it. And then 2 up, 2 up, inside. So then we had another 60-minute reversal. In this 60-minute reversal, if we go and look at all of the charts, I wonder if they all, yeah. So what we had happen, and there was news, but there's also strat reasons, and I'm going to tell you exactly what the strat reason was. So we also have something in the strat called simultaneous breaks, and it is exactly what it sounds like. It is, I always kind of dumb it down. I say it's a bunch of things doing the same thing at the same time, so simultaneously. So what happened on Wednesday at this 12 o'clock time, all 4 of the futures went inside hour and up. So that is a simultaneous break. That is proof of algorithmic buying. And then, of course, the news comes out. So when you go back to the daily, what we know about candlesticks is there's only 3 things that can happen. You're an inside, you are a 2, which is a directional bar, or you're a failed 2, go 3. So once the downside failed and we were no longer below, was that Tuesday? We were no longer below Tuesday's low, and we started reclaiming, meaning coming back through Tuesday's low. Your take action window then becomes, this is going to sound crazy, then becomes potential outside bar. So your magnitude becomes to take out the previous day's high, because that's how threes happen. You take out one side of the previous candle, start retracing, you change daily time frame continuity, because anytime we're below the open, the candle is red. And so we changed it from red to green, so targeting at least here. And then we ended up hitting Friday's high as well. So there was a strat reason for what happened on Wednesday. And again, I feel like I just got caught up in my downside mentality, and I didn't take the simultaneous 60-minute break. And you can see here, this was Tuesday's low. We failed to hold below it. If we go to like a 4-hour time frame, it probably look a little clearer. We failed to hold below it. And then this was Tuesday's high. So once we start failing and coming back up and through, we are looking to take out that high to become an outside day. And if you don't know what an outside day is, it takes out both sides of the previous candle or range. And this is on any time frame. A 3 is a 3. And we use full candlesticks. So we don't care about the body. We care about the high and the low of the candle. And the reason for that is because that's where people's stops are. So anybody who was short this day, their stop would likely be up here. So we are targeting losing traders, and we are trying to stop them out. And again, I'm not perfect. You know, I've been stratting for a while, and I love volatility. I love when the VIX is high. But you just got to be so careful in this market right now. And it was hilarious to me that there was the fake pump on Monday about pausing tariffs, and they're like, "Oh no, we're not looking into that." I feel like, I don't know. It's just, it doesn't matter. The news doesn't matter. Market manipulation doesn't matter. What matters is what's happening on the charts, and that is what we care about. So if you missed the move, don't beat yourself up. I feel like most people miss the move, even people that have been doing this a really long time. So it's all good. All right. let us get in. Hi, Elaine. So people ask this a lot, like, what is the best reversal pattern? And it's not so much what is the best reversal pattern, it is where they occur. Let me try and think of a good example. For example, so where they occur is what's more important. Because I don't care if it's an inside bar break, a 2-2 reversal, a 1-bar rev strat. It's just where they happen is what's important. And I'm going to show you here in a second. So RTY, this day, inside day, opens here, triggers the inside day and down. So actually, this is a 3. 3, 1. This was a 2 down, but what did it do? It hit its downside target. So if you were short, perfect. That's where you're supposed to exit. That is the target, right? You can see the teeny tiny little wick there. That's where profit taking happened. So anybody who was short, that's where they started to short cover, because that's where you're supposed to short cover, at new lows. So they made new lows. So you can be short from here to here. Once you get to your target, then you don't know. Then you have to look and see if there's a reversal. So if we go, I don't even know, I'm just going to pick a 15 right there. It didn't go well originally, but so this is the candle right here where my cursor is. This is the candle that hit the downside target. And if you're day trading this, there was even a lovely entry right here. This is a 2 up, 2 down to hit the target. So it hits target. Then you get a 15-minute candle flip. They open, they go green. The trigger is there. So this is what we call a downside exhaustion reversal play. So we've hit all of the targets. We stopped all the longs out. Anybody who was long and using this as their stop just got taken out. So then they have to start closing their positions, which causes price to run away from our target. So this is an entry right here. 2 down, 2 up, 15-minute. I'll pull up. 2 down, right here. 2 down, followed by a candle going the other direction. And again, I'm going to cover the 3, there's technically 4 candle types. You have an inside bar, which is an equilibrium. So the high and the low, this might be really small for you guys. The high and the low is completely inside the previous candle's bar. Previous candle's high and low. This is an equilibrium or consolidation, or buyers and sellers agree on price, and it's just kind of chopping sideways. This is a 2 up. What makes it a 2 up is the fact that it broke the upside of the previous candle's high. So that's a 2 up. There's 2 kinds of 2s. This is a 2 down. It's very rudimentary, but you'd be surprised how often people mix up candles. This is a 2 down because it broke the downside of the previous candle. Okay, then you have a 3. A 3 takes out both sides of the previous candle, and it doesn't matter the previous candle. The previous candle can be a 1, so it can be an inside bar. It could be a 2. It can be a 3. But it takes out both sides of the previous candle. And on a lower time frame, a 3 is a broadening formation. So, and this kind of gets tricky where we can blend candles together. So if you view this swing high and this swing low as one candle, we take out the high and then we come and we take out the low. So this is a compound outside bar or a compound 3 or our broadening formation. I think where people get confused is when they see a green 2 down or a red 2 up, and they will mistake them as different candles. I'm trying to find one. Let's go to the day. So right here. So people will mistake them because of their color. So this is a green 2 down, and it's a 2 down because it broke the downside of the previous candle. So this is a 2 down, but people want to say it's a 2 up because they see the color and they're like, oh, well, it's an up close candle, so it's a 2 up. That's incorrect. This is a 2 down. Red 2 up. People want to say this is a red 2 down. It's not. It's still, the rules are the rules. So it broke the upside of the previous candle. This is a red 2 up. Ooh, the chat is going. Hey, Shab. Good morning. Okay, so let's talk about, I've been talking about Strat too long. Let's talk about our bias for the day. All right. Bias for the day. So we have, this is a red 2 up or a failed 2 up, okay? So the only possible reversal that can happen today, because there's only 3 things that can happen, but it's got to do something. So we're either going to stay an inside day, which would be terrible, and there would be not a lot for us to do, or, and this is what I want, we're going to go 2 down, meaning we break the downside of the previous candle. Now, this candle, the big giant green one on Wednesday, this is a 3. So a 3, a failed 2 up. Is that on the Strat combo sheet? It is. Where is it? Right here. So this is, we have a 3. So we have a big outside bar or smaller time frame broadening formation. We have a failed 2 up. So if we can trigger and trade below yesterday's low, we would look to target the bottom of Wednesday. Just reading the chat for a second. Yeah, Austin. So Austin's in our Discord. He's a moderator. He is very disciplined in his rules. If it's an inside day or we're currently inside the previous day's range, he's not trading. Good morning, everyone. Shab is my good friend, and she is Swing Pony on Twitter. Whoa, whoa, whoa. Austin, is Alex streaming today? Okay, so anyway, back to this. 3, 2 up, 2 down. NQ has a different setup. NQ is a 3-1-2. So NQ on Thursday did not take the previous day's high. It stayed an inside day. So it's the same setup though, basically. If we break below, it's not the same, but the trigger, the short trigger, is still yesterday's lows. So if we trigger below yesterday's lows, we'd be targeting Wednesday's lows. Because there's only a certain amount of ways price can reverse or continue. So we know this to be true, and we trade based on that. So what I would want to see is a 3-2-2 down on ES, and a 3-1-2 down on NQ. (3-1-2) down on RTY. So 3-2-2. So ES and YM are the same setup. 3 failed 2 up. We'd be looking for the 2 down. They have relative equal lows down here. RTY already took out its lows, so not favored because it already hit downside magnitude. And I don't know that we're going to puke this much. And again, there's so much going on in the world that all we can do is what we can do. If the setups don't work, we got to get out. And that's fine. I'm deleting these older lines. And then while we're here, we got 6 minutes. Let's look at, we're going to go look at gold. Gold is like the most beautiful chart ever. I don't really trade gold, but it's just doing beautiful strat things. So, okay, we'll start at the year. The year from 2023, 3, 1, 2 up. Is that an actionable signal? It is. So it's an inside bar break. So still good in 2025. The year opened way down here. Pretty much they've been buying since the beginning of the year. There's like no lower wick, I don't think. Barely. So they've been buying gold all year. So if we go to the day, this is beautiful strat stuff. So I remember not last Friday, 2 Fridays ago, I said if you were in from here, you would take profit right here when we broke a previous day's low, and then you could look to re-enter. Could have re-entered on this inside day and up. So what happens, we get some corrective activity or a pullback, or we don't like to use these words, but a bull flag, because bull flags are subjective and people like to average into them. We do not average into trades. So you get an inside bar reversal. So a 2, 1, 2 up. Doesn't really go anywhere that day, but it also does not reverse, meaning it didn't take out this day's low. So your stop will be here. Then you get another inside day. You can add. Okay? What's the target? Well, since we're at all-time highs, since we're at all-time highs, the target is to make a new all-time high. And we do that, and that's great. Now, if you want to take partials here, you can. If you want to leave a runner, you can. Because as long as you still have 2 up, 2 up, 2 up, it's 2 up in red, but it didn't reverse the previous day. 2 up, where do you have to exit? Your stop that was down here, and you can trail your stops up the lows of the candles. Once you get this 2 up, 2 down reversal, what becomes your target then for our broadening formation? The target becomes to make a new low. So it does that. So price makes a new high. So you have a high, low, new high, new low. So you can be long all the way up through here. Then you flip short. Then you can be short all the way through at least here, maybe even, we'll just use the daily. So you can be long through here, short through here. Then once you make a new low, again, this is what we call exhaustion risk. So anybody who was long from anywhere in here and using this pivot low as their stops, this is how broadening formations happen. This is how we target losers. This is how we trade against people in losing positions, because if they were long and they didn't take any profit along this way, or they didn't exit here, their stop is here. People are taught to use trend-based stops, and we use that against them. And it's a wonderful thing for us, not so much for them. But we hit that pivot low, come down, inside bar. And here's what I was talking about range. So this is a 2-1, it was a 2-1-2 down continuation, but it was unable to stay below the previous day's low. So remember previously I drew the little take action window? Okay. So, but if you're not enforced to the downside and you flip continuity and start coming back through this candle, your take action window then becomes to go outside day. So it's fine to have a short bias, but you have to flip it, just like what happened on Wednesday. You have to flip it when it comes back through and starts changing continuity. And then we're at the bottom of our broadening formation. What's your new target? To make a new high. So I love to say this. You have a high, low, new low, new high. And these happen all the time on all the time frames. These happen on 5-minute charts, 1-minute charts. There was a beautiful 1-minute broadening formation on ES yesterday, which gave like 60 points in just a few minutes. But if you understand how this works, and this wrecks most retail traders, because most retail traders aren't taught about broadening formations and how they work. So they're like, oh man, I got stopped out, and then the move I wanted happened. Well, this is why, because this is how price action really works. So gold is really an awesome chart. And now we're up at all-time highs again. So if you're long gold, you want to be trailing your stop. So now you've hit a new all-time high. So now, again, you don't know. You're at potential upside exhaustion risk. And again, it doesn't mean it has to reverse, but if it's going to reverse, it's going to happen after we make a new high. But say we get 2 up, 2 up, 2 up, you're good to just trail those stops right up. But if you get a reversal, that's where you're going to want to exit your longs if you're actively trading gold. This is just the perfect chart. I love it. And people are like, oh, you know, your lines are drawn arbitrarily. And I just use a disjoint channel. Can't find it all of a sudden. There. Oh, okay. Too much talking. Too much education, but it's fun. Okay. So again, we are opening inside day on everything. So unless we can break a previous day's low, preferably the low, just because we are closer to triggering previous day's lows than we are to trigger previous day's high at this moment. That could change. Yeah, Shab, she's a natural for finding broadening formations. And they're super awesome and very helpful because most people are taught to be breakout buyers. That's the opposite of what we do. We are long until the breakout and then we defend. Let's look at the 4-hour chart. I think the 4-hour, okay, this is awesome. The 4 hours look good. So red 2 up. So our actionable candle is always the live candle. Our trigger candle is always the previous candle. So we have a red 2 up on the last 4-hour candle. So this is what we call a potential domino trade. So we have a potential 2 up, 2 down, 4-hour reversal, which, if that works, can trigger the day. So for your 4-hour time frame, this could be your take action window or your magnitude. So short here, targeting outside, or sorry, not outside day, targeting a 2 down day, and then potentially targeting a lot more. But you're in earlier because we're always forward thinking. If this works, what will that create, negate, or do? And if the 4-hour works, what can that create, negate, or do? If the 4-hour works, we can trigger the 2-2 reversal day. So YM just triggered the 4-hour first. So this is a potential short entry. Now you do have a little target here. I like to make my targets green. They all have the same setup. So we can potentially get simultaneous breaks on the 4 hours. And we just covered simultaneous breaks, which is all the things doing the same thing at the same time. And you can see they're all very close to triggering their 4-hour down. That is something we want to know about. Now, we are a little bit in conflict with the week being green, but all higher time frames are red. So the year is red, the quarter is red, the month is red, the week is green, and we're hoping to keep the day red to go to the downside. So we only have one time frame that's green, which we can change that if we can get back down here. And then they'll all be in alignment. So we're very close to them all going to the downside. It looks like YM or RTY, RTY is looking like it's going to hit its target first because it was the first one to trigger. So relative weakness in RTY, small cappers, or as Rob would say, small crappers, RIP. NQ just tagged a midnight. Again, I don't use a lot of ICT concepts, but I do mark the midnight open because you'll often see reactions there. They fell below the midnight open on NQ and it's heading down towards that pivot low target, which is where long stops are. So anybody who'd been long, bought this dip, good, right here, they would have had to have exited. They should have exited there if they were long, because that's a reversal. All right, the 4 hour looks really nice. So that's kind of what I'm watching on there. I should have looked at oil. I still can, because I'm not trying to do anything right now. We are currently inside 4 hour. We are currently inside day on 3 out of the 4. Let's do that. Let's look at oil. I'm pretty sure it was an amazing chart when I looked at it earlier. So I want to talk about it. Hold on, maybe it wasn't oil. Maybe it was, I think it was silver. Yeah. Okay. Yeah, I wanted to talk about silver. This is just beautiful stuff. Once you see the strat, you guys, you're just going to be like, oh my God, so easy. So let's say you were long here. Why would you be long there? Because this is an inside bar. This is a 2, 1, 2 reversal. Okay? What is the first target? To make a new high. Here. Inside and up, that's your target. Pivot high. Boom, it hits it. Okay? So you take partials there. Then what happened? Red 2 up. Nothing much happened. Green 2 up. Okay, fine. If you were still holding long, you would have to exit here. Why? Because this is a 2 up, 2 down reversal. Okay? So we failed to make a new high. 2 up, 2 down reversal into, we call this a pivot machine gun, where you have a ton of stops and a ton of pivot lows or stack stops. So these, on this candle, this 2 up, 2 down candle, because we made slight higher highs, right? So when we fail and start to reverse, where's your broadening formation? Right here. High, low, new high to this guy, right? Reversal, where are you targeting? A new low. So it makes a new low, and then it keeps going. So again, you can trail on a lower time frame, like the day. You have a pivot low target there. Pivot low target there. Pivot low target there. It took everybody out. Major pivot low target. Okay, what happened? Short started covering here, because again, that's where you're supposed to cover. There's nothing else nearby. The next one, pretty far away, right? So then you cover your shorts, you look for a reversal back up. Where did that happen? Let's look at the day. Let's even look at let's go small. Let's go real small. Oh gosh. Inside bar and up at downside exhaustion. You get long from here. It's just so fractal. Long from here, that had to have been, oh, no, it wasn't. Long from there, boom, and you're still good. The week's green. So even if you're not in it, you can take a 2 down, 2 up reversal next week. And then your target becomes this pivot high and that pivot high. So if you view it as a range, swing high, swing low. So again, compound outside bar. You need to drag it over. So this becomes your kind of actionable box, right? Like how threes happen, failed one side. Where are we looking to go? We're looking to go to the other side because that's how price action works. And this stopped anybody out who had been long since August of 2024. Any questions on that? Bitcoin just ripped. Perhaps it's responding to USD rather than tech. Let's look at Bitcoin. I don't use the, oh, okay, downside exhaustion. Why? Because we took out a pivot low. Here was the weekly reversal, 2 up, 2 down. That was probably a little tricky because it almost went 3, but it didn't. So if you had your stop up here, you were safe. And also, you don't have to be the first one into a weekly trigger. You can let the week trigger. So this was the weekly trigger. Trigger week. So it triggers. So again, you don't have to be the first one in. You can let some corrective activity happen. What happened here? 2 up shooter. You short there, targeting a new low. This was lovely, actually. It was perfect. So that's your take action window. Because if you go to the week, that's the take action window. Short there, target there. Once it gets there, then you don't know. Then Wednesday happened. Failed 2, goes 3. They're going back through. All right. Okay, so nobody else has triggered the 4 hour. So, where did my 4 hour line go? Oh, it looks like, oh, I don't have my glasses on. I just noticed I was leaning in. 461. So the thing about higher time frame triggers, this is something else I always say, and this is why I like domino trades, because higher time frame triggers, so for example, this 4 hour short trigger is a lower time frame target. So just like we were talking about on the weekly, you don't have to be the first one in. You can let it trigger and then wait for corrective activity on a lower time frame and then look for a reversal back in. And what I mean by higher time frame triggers are lower time frame targets. It's exactly this. So this is the 4 hour trigger, right? 39464. But what else is it? It's the 60-minute target. So if you were short on this 212 down. So again, forward thinking, if this inside 60 bar breaks to the downside, can that trigger the 4 hour reversal? And it did trigger it, but they're taking profit here because this is fresh lows, right? So your magnitude, if you're day trading, is there. Inside bar, make a new low. They did that. But now they're reclaiming through that range. So this gives the potential for an outside 4 hour. Because again, if you mark your range, which is not really what we want, but kind of looks like that's what might be happening. And another thing about the strat, when you are stuck inside a higher time frame range, so potentially we can go up here and become an outside 4 hour. So what I was trying to say, I need free range. So when you're stuck inside a big range, which we are because we are inside day on all of them currently, what you'll see happen is price discovery starting over, and you will see broadening formations on lower time frames. So if this is the day, this might be your hour, right? And just chopping people up, you know, confusing all the trend people You know, that's easy, right? But they don't do well with this, whereas we do well with this because we can expect price discovery and the range to broaden and get bigger, as opposed to getting smaller inside the range. It tends to do this and get bigger. And I know I'm talking a lot and teaching a lot, but there's nothing for me to do right now. So see, if you don't take profit at your targets, this is why I teach people take profit at your targets, because if you didn't take profit down here, what was that range? It's already back to your entry. So that was a 369 point trade based solely on Strat. If the inside hour and down works, can that trigger the 4-hour reversal? But again, that's your magnitude. So if you're day trading, which most people are day trading futures, that's the trade. Then you can look for a reversal back up. Let's even go to the 1 minute. I guarantee there was a reversal. All right, there's our 4-hour line at 464. I did this yesterday on NQ. It worked out pretty nicely. Right here, 2 down, 2 up. So bear with me, I can never find, no. There, and potential 4-hour outside bar, which is way up here. So what is this? Like 6.4 to 1. And it never came back and made a lower low. So that was remember, the 60-minute magnitude or 60-minute downside exhaustion. And we basically have like a pivot machine gun. Look at it, just hit that pivot high. Got that one. This is only on a 1 minute chart. So the moves have been pretty crazy. Like micro mode for sure. I don't think it broke it yet. Not yet. Not yet. But again, I think it's trying to go outside 4-hour. Okay. The other two are still inside. Bunch of inside 4 hours. Not sure why that's a 6. Oh yeah, so the Strat, like before Rob passed away, he was working with oh, I hope I don't say it wrong. I want to say it was North Carolina University. But anyway, he was going to start teaching the Strat to college kids. And he didn't get to do that. And I actually was trying to contact the guy because we could teach. But yeah, like this should be taught in college. Yes, thank you. Yeah, UNC. I knew it was North Carolina. Thanks, guys. It's so simple. Like, my daughter, see, I got to her late. She was like, how old was she? Let's see. She was like 12. and she just didn't care about this. I even had her paper trading, and I told her when to click the buttons, and she made like a lot of money. But see, she was also too young. She made like, I don't know, like $1,000 in like a few minutes. And I was like, isn't that so cool? And she's like, I was like, okay, that's because you haven't worked a job yet. So then she got a job when she was 15, and she was like, oh my God, like I work so much and I make no money. I was like, let me teach you the strat. But she's never shown an interest, and she's asked about it because she wants easy money, but I'm like, nah, no, your heart's not into it. And I've sent her my course. She has not watched it. So until she gets serious, I will not be serious. I will not spend my time teaching her if she's not ready to learn. But now she gets it. So anyway, all that to say, you can teach your kids the 1s, 2s, and 3s. They can be 3 years old, and you can be like, what's that? And they'll be like, that's a 2-up, Daddy. What's that? That's an outside bar. Like, it's that easy. And then you teach them the reversals. And Rob had 2, like, 13-year-olds that he taught the strat. Like, this isn't hard. Like, this, you can teach this to your kindergartner. It's only basically 3 reversal types. There's an inside bar reversal, there's a 2-2 reversal, and then there's a 1-bar reversal, which is a 3, which I can't find it here. That's really all there is. It's just different combinations of the things, but it's inside bars, 2-2s, outside bars, and broadening formations. You can teach this to your kids. Yes, there is consumer sentiment at 10, and Tracy's going to come on and talk about it in a few minutes. Hi, Maria. No, trading is not easy, but my daughter's like, "Oh, I want to make money like you." I was like, "Oh, it's not." Well, it also, Alexis, it takes money to make money. You can't make any money. Yeah, Austin. So Austin homeschools his 3 boys. I hope you're teaching them the strat. So he says, I'm teaching my 17-year-old, so when he turns 18 this summer, he will be ready. Awesome. Rob Smith is the creator of the strat, who passed away almost 2 years ago. Yes, correct. Simple, yes. Easy, not so much. Hey, nice. Started learning about the strat a few weeks ago. Literally saved me tons of money. Thank you. You and your community is awesome. Thank you. Yeah, we have a lot of new people in our community, which is awesome. And again, like I said this morning, I'm not sure I'm going to be taking a single trade today, because we are inside day, inside 4 hour. We're stuck right now. Had we taken out this 4 hour low, I'd be more interested. But if you view this as your range, your swing high, your swing low, we're just stuck inside of it. Whereas YM actually took out the lows. Swing high, swing low. That's the range. We just talked about this earlier. If you fail one side of the range, which we did, I know you can't really see the wick right now. Where are they trying to go? They're trying to go up there because they are back through this range. RTY, kind of same thing, but YM is stronger. It's a lot higher and more through its previous range. So ES and NQ are the same thing. They're just stuck. They're stuck in their range. NQ is trying to go outside 60. ES is trying to go outside 60. So only when you fail one side of a range, like that's where you want to be. So this guy, take out the lows. So if you were short from here to here, you got to cover, which is where you should cover. Then you can look for reversals back up. Like if we go to a 5-minute, I'm sure there was one. Yep. So they hit their lows. 3, 1, 2 up. So this is a 3, 1, 2 reversal. And again, it's all fractal. So you can go on any time frame. Probably find a 1 minute in there. Two down, 2 up right there. Just like we showed on YM. Oh, my bad. Trying to go up there. Which would be your outside 60. Well, it's trying to go higher, but. For any oil traders, oh, didn't mean to do that. Oil's trying to take out this pivot low down here at 52.90. And you have the same setup as ES. So if you can trigger the day short, you got 2 targets, this being a major target. We'll make it dashed. But still, so far, inside day. So not a lot to do there. Let's look at the 4-hour. Still, we're just stuck in this leg. Oh, here you go. Here's the 12-hour chart. This is a 2 up. So, forward thinking. I don't have a 12-hour template, but I usually do this, and then I change it to 12. So, forward thinking. If this 2 up, 2 down, 12-hour triggers, can that trigger the day? Which is what you would want to see happen. So you want to short there, see if they can trigger the day, and then come down here. And I imagine we'll be taking 52.90 out relatively soon. So yeah, domino trade. That's what we call them, domino. Meaning, you know, the lower time frames kind of trigger the higher time frames. And it could be any time frame you want. You can have, if you have, you know, an intraday setup. So say you have a 60-minute actionable signal. Maybe there's a 30, a 15, a 5. It starts at the higher time frames, and then you work your way down. So maybe the 5 can trigger the 15, which can trigger the 30, which can trigger the 60, which can trigger the 4-hour of the day. Like, it's any sequence of time frames. But it starts at the higher time frames. And that's why we do this top-down analysis, and we start at the higher time frames so we have perspective. And I think Tracy will be on here in like 2 minutes. She's so cute, guys. She's little bitty. Little bitty cutie. Yeah, inside, I mean, it's not really a click and button kind of day. If you want to join, so we have a free community. In the description of this live video, you will find the link to my Twitter And then I have a link tree in my bio where all my stuff is, so you can join the community there. It's such an awesome free community. Like, you guys should check it out. We all love Tracy. She's giggling, you guys. Yep. All right, we got data in like 20 seconds.
Hey, Sarah, how are you?
Hey, Tracy.
All right, so we have data coming up. It's going to be important. We have consumer sentiment and then University of Michigan inflation expectations. Oops, sorry, my bad. Usually too loud. We have University of Michigan consumer sentiment and 1 year and 5 year inflation expectations. So this data should be out in right now. So sentiment expected was 53.5, came in at 50.8. So consumer sentiment is not good. And as far, wow, University of Michigan 1 year inflation expectation expected was 5.2, came in at 6.7%. So a huge increase in inflation expectation on the 1 year, and 5 year expected was 4.3, came in at 4.4%. So not much of a change there, a little bit higher, but that 1 year is huge. So let's see how markets react to that one. All right, well, we're back to Sarah, you guys. I just popped in for the data.
Thank you, Tracy. Kind of a non-event. We did get a new 4-hour flip just now. So now we are currently double inside 4-hour, which is even less fun. Yeah. Although the candle is red, we want them to go trigger the 4-hour on ES and NQ. So the ES trigger is 5262, NQ trigger 18351. Oh yeah, if you guys want the Strat indicators for NinjaTrader, you just send an email. I have it written on my laptop. Send an email to learn@ninjatrader.com, and my friend Mike will personally email them to you. Oh, fancy. Oh, it's pinned in the chat, guys. Yep, nothing to see here. Here, let me pull over. Ooh, actually. So potentially, you got 15-minute reversals that can trigger the 4 hours. So this is a 3, 2 up, 2 down. I personally don't like trading in the news, but this would be the setup. So that's your 15-minute trigger. So if that works and hits target, can that trigger the 4-hour inside and down? Got 11 minutes left on that candle. So 11 minutes for it to do it. And why is that? Because the 15-minute signal will end at the end of 15 minutes. What's the 30-minute look like? Lip. Inside, 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 inside. 3 ones. So maybe we don't get it till the 30-minute flip, which is like 26 minutes away. This is just not going to be, you know, we were lucky to have the last 2 Friday live streams were really good because we had like actual setups that triggered. Today we do not. Let's see if I can find that 1 minute. I think it was right here. That 1 minute broadening formation from yesterday. Or even a 5 minute. Swing high, low, pull it over. So if you were short from here, targeting there, nice, got a cover. 2 down, 2 up reversal, trying to go to the other side of the range, which it did. That was a pretty nice move. There to there. A 98-point move on ES. Then what do? You can take profits there. If you're trailing a runner, you got to get out right there because price is reversing. It's no longer making higher lows on the 5 minute. And you can see it pulled all the way back into there. Yeah, we're just stuck, guys. Just stuck. Not ideal. So we're inside on the day. Inside on the day. Inside on the 12-hour. Inside on the 4-hour. Inside on the 2-hour. Inside on the 1 hour. Inside on the 30-minute. This is not what you want to be trading. Why? Because price is not going anywhere. It's just going to chop you up. This is not a fun trading day as it stands. Yeah. Yeah, if I wasn't here right now, I would not be sitting at the charts. That's for sure. Start your weekend early. It'd be cool if YM goes outside 4 hour. That's about it. That's about all you got. Okay, perfect example of when setups fail because we are stuck in a higher time frame inside bar. So this 2 up, 2 down failed because again, we are trading in such a tiny range that you can expect for things to fail. That's why this is not the time to be pressing buttons. So I have a free course on YouTube, which again is in my Twitter bio. It's called The Strategic Principles. And then Alex and I teach a live course. We were supposed to start it in January, but we are busy building something else at the moment. So until we get that wrapped up, we're not going to have another live boot camp until that's done, because it's taking a lot of our time and attention. And boot camp is very, and it's a lot. We're live like 8. I think the last one was 12 nights. It was too long. It was too long for even me. But yeah, you can check out my bio, my Twitter bio, the link tree. Yep, just nothing to do. XRP is awesome. Because we just took out a major low, so downside exhaustion risk. Look at this. So your broadening formation would look like high, low, new high, new low, stuck inside. So this is chop. But until this happens, so then we make a new low. Oh, that's ugly. Let me redraw that. High, low, new low, then stuck inside, no good. This is a higher time frame inside bar. Then what? Then poke down, then reversal. So we'd want to see a reversal, which next week it looks like we will get one. And this is what you want to have happen. So anybody who was long using this as their stop just got stopped out. So then next week, you want to see a weekly 2-2 reversal. And I think Bitcoin looks just like this. And go back through the range. So if you view this, swing high, swing low. Again, all the longs just got stopped out this week. So now we'd want to see them go back through and target the other side. Now you've got internal targets in here, so that and that. So you might see some reactions in there. But yeah, this would be our broadening formation. Or the start of one. Also, downside exhaustion on the month. Trigger, target, it hit it. Right? So then when that happens, we look for reversals the other way. So again, looking back up. That chart is fugly, but it did the same. This is really an ugly chart. It did the same thing. It took out the lows. This doesn't even look like Ethereum. We're going to pull up. Oh, it didn't take that low on the Coinbase chart. Hello, broadening formation. And if you're going to get good at this. High, low, new high, new low, new high, new low. That's awesome. Take profit at the highs, look for reversals back down. Take profit at the lows, look for reversals back up. Take profit at the highs, look for reversals back down. Take profit at the lows, look for reversals back up. This is just gross lately, the past like 5 weeks, but you can't not see this, right? What is this? Hogs. Piggies. Oink oinks. Oh, beautiful. Copper. What'd it do? Took out the lows. Boom. Look for a reversal back up because everybody just got stopped out who was long since December of 24. Fun stuff. That's not so clean. Natural gas. Ugh. I tried to trade this before. Takes out the highs, reversal back down. So this is why breakout traders don't do well, because that's lower time frame people's targets. OJ. Took out the lows, 1 bar reversal. Since a year and a quarter ago, January 24. This is an awesome chart because you had a reversal right here. It never went against you. So 2 down, so price is continuing down. 2 down, 2 down, 2 down, 2 down, inside, add, target, 2 down, 2 down, 2 down. Failed 2 goes 3. But this is that profit-taking level because that's all that's close by. But wow, what a short. A 47% drop. Oh, that's nice. That's nice. Same thing, takes out all nearby lows. So support isn't support, it's your downside target. That was like a big, what do you call it? It was a big moment for me in like my strat education was when I quit using words support and resistance and I instead made support become the word target. And I made the word resistance become target because that's what it is. All right, let's go back. Let's see what's not happening in the futures. Oh, look at that. Nothing. Yeah, boring trading day. Do you guys have any questions? Because there's just nothing going on here. I don't recommend pressing buttons. I never, ever, ever look at bonds. Victor, can you look at German DAX? Sure, if you tell me what to type. I also don't trade Forex. I know, like, the common ones. Like GBP, USD, but like I don't know how to find that. You should be bored. This should be very boring to you. And you should be like, I don't want anything to do with this right now. Yes, but what do I type, guys? I don't know what to type. Do I just type DAX? Is that all I type? Yeah, this looks weird. Oh, wait. DAX. This one? The Global X DAX Germany ETF, which is on the NASDAQ. Does that sound right? Somebody said type Tesla. DAX and select futures. Okay, I'm thinking it's this. No. Okay. No, I can't look at that. Let me go back to all. It looked like I might have been able to. Does this look right? Oh my goodness. This is the yearly chart. High, low, new high, new low, new high. There's your broadening formation. Boop. And then failure to make a new low, inside bar reversal to new all-time highs. Cool. So they took out this pivot low, like we've been talking about. Stop people out, pivot low. I bet there was a reversal in there. Yep. Inside bar and up. Inside bar and up, inside bar and up. They'd be looking to go back up there. Wow, look at the size of these candles versus these. Obviously, we've had a lot of volatility, but it's just cool to see. Let's look at the VIX, because we have nothing else to do on the futures chart. I wanted to take out this guy. That was the upside target. But then Trump tweeted and ruined all that, didn't he? Also, how hilarious. It's just cool for a president to like inside trade. Now is a great time to buy. Did you guys see that? I was like, what is this life? And then the CME changing the halt rules. Like, what is... We just can do whatever we want, I guess. Interesting. That's fine. We just play their game, and we have to manage our risk. That's all you can do. You must have a stop in, especially with futures. Inside day in green, because the futures are inside day in red. 12-hour is trying to go outside bar. Now, we don't look to VIX for like market clues because we don't need to. We can see what is happening all by our own selves. Oh, we're getting... Oh. I think NQ triggered the 4-hour. Oh, now it's time. Here we go. Something's happening, guys. All right, so NQ triggers the inside 4-hour and down, which we want them to really start puking. We need ES to do it as well. So the goal, remember, the goal for the 4-hour, which has 3.5 hours left in it, is to puke and then trigger the 2-2 reversal days. RTY, almost at its target, just took its sweet little time. And I deleted this target for some reason. All right, so we have almost simultaneous inside, well, 2-2, 4 hours and down. So if you're scalping, this would be your like take action window. Well, first it would be here because that's target 1, right? And then that's your target 2. So the 4-hour, again, this is what we call a domino trade. Where's the 12-hour? So the 4-hour target is also the 12-hour trigger. You were in a 53-second trade. Nice. Oh my gosh, when things were super volatile, I guess it was Wednesday, even trading the micros was like too much. We did just hit a target, so see that pivot low on the hourly? Here. I don't think I'm going to be pressing buttons today, but because we are still inside day. Now, the 4 hours did trigger, but they did just take out a little target. But let's see if they... So see, you're seeing little 2-2 reversals here, which is some people short covering because that is a target, right? So if you're a sniper and you're on the smaller time frames, pivot lows, targets. So again, like I was saying, higher time frame triggers are lower time frame targets. So this pivot low is definitely a target. So they're taking profit as they should. But let's see if we get reversals back down. So you want to see like 2-2 reversals back down or inside reversals back down. What time is it? So we have new 5-minute flips at a level of downside exhaustion. What you'd prefer to have happen is an inside bar down. Okay, potential 2-2 revert, so 2 up, potential for 2s back down. I guess I could click a button. I'm late, it already triggered. That's a 10-point stop. Still inside 5-minute. On all of them. Guys, if you haven't already, hit the subscribe button to NinjaTrader. You'll get notifications when, you know, they go live. Yeah, people do use the Strat for Forex. So the Strat, it works on everything. Everything with a price chart. So you just saw me like go through all the futures. It works on everything. Like, I'm really bad at Forex pairs. Just like knowing what they are. Let's, I always start at the higher time frames. Ooh. That's a really ugly chart. Ugh. What's another pair? Can I just, no. Aha, that's what I was wanting. Oh, okay. I see a broadening formation. High, low, new high, new low, reversal, new high. Look at this. I mean, you can't make it up. Boop, 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 boop. I don't know what we care about. This is just stuck. So swing high, swing low, gross, stuck. No. When you stare at charts so long, you become really good at blending the candles together. So this would be one candle. And all of this in two candles is, well, it's all stuck inside of this. This is what you call a compound inside bar. So if we went to like a 6-month chart or a 3-month chart, you're going to see multiple inside bars. Let's go to a 6. There's your inside bar. These are all compound inside bar. This is what we call a mother bar. So like a giant candle and then stuck inside, stuck inside, stuck inside, meaning you've not been able to take out either side of the range. So again, tightening, gross, yucky. You don't want to trade that. All right, let's go back. Ooh, ooh, what did I just do? I don't know. Okay, I saved the day. Again, so they took out the lows and started reclaiming. This is not, it's all stuck inside. So if you go to a 1 minute, they're trying to go outside bar. So they take out the lows. Let's go to the 1 minute. Ugh, this is just not good trading right now, guys. Again, I've said it ad nauseum. We're inside on all the important time frames. They're trying to go outside bar. So take out the lows, fail to stay below, trying to go there. This is like scalper stuff. Not fun trading at all. Fresh lows, potential failed 2, go 3. So they took out the little 1 minute lower high to go outside fiver. So you can even just scalp for outside bars, which is a fun thing to do. So when you take out a previous candle low and start coming back through, you can just go long, stop there, target there, just like I showed you on the 1 minute. Like a little bitty scalp. But with the ranges, it's probably not so little bitty. No, see, that was a 25-point move. And let's say you only got it there, 22-point move. Yeah, they're not so tiny. This is just not what we want to be trading, though. And potentially, we're failing the lows. So if this is your range, right? They're failing to stay below. So got here, here. But again, all of this is an inside bar to all of this. See how this box is completely within that range? But we also know that broadening formations happen inside, like we talked about this morning. So if you're stuck inside a higher time frame range, you can expect broadening formations. This is just not high probability trading, so so this is a 3-2 continuation 5-minute. They're trying to go outside 15, which is up here. Got 9 minutes left to do that. So anybody who shorts support breaks is not happy. Instead, we're short from the 15-minute, targeting there and there, and that's where we're covering. People who aren't shorting are just getting blown out. Yeah, ugh, just stuck. They're trying to go, like I said, outside 15, which is at 28.25, which is up here, basically. And there was your broadening formation, like we were talking about, failure to stay below the lows after hitting that target, and then 1-bar reversal. I feel like a tweet's going to come out at any moment. I don't know. Sometimes I get those feelings. It's weird. I don't know. We have 7 minutes till, so look, they stopped these little guys out. Let's see if we get a 2 back up. So see, my stop's automatically on the chart. I'm just clicking a button just to click a button. I was a little late to the actual trigger. Watch this be a little baby broadening formation. Got a new 5-minute candle flip happening now. 84. Yeah, see. I should have moved my stop, but I wasn't fast enough. I should have moved it to right there, because I was looking at the other screen. This is why I shouldn't be clicking buttons. It's not a good time to be clicking buttons. Broadening formation, high, low, new high. That's why I should have moved my stop quicker, but I was not. Broadening formation. $83. Like, I will try it again one more time, but see, I get caught up in broadening formations too. I don't even know why I'm trading this. It's trying to go outside 5-minute. This is terrible trading. Well, I'm gonna stop. This is terrible trading right now, guys. I'm gonna pay attention to the time and move my stop this time. Three, two, one, skirt. Now, like, blast off. That'd be great. So it just went outside 5-er. No, it didn't. We need one more tick. We need 98.50. There we go. Oh, for goodness sake. So I'm just kind of trailing down the 1ers because I want this to like go boom. But there's your broadening formation still. High, low, new high, new low, new high. I don't want them to reverse again and go make a new low. We need to expand out of this. Gross, 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 just gross. NQ has the same broadening formation. Could view that as high, low, new low, new high. I just got stopped out. Yeah, I'm not clicking any more buttons. This is terrible. If it goes without me, it goes without me. We do have a 15-minute flip, though, in 30 seconds, which this probably just stopped me out, and now it's going to go because we have a 2 down 15er. I might try one more time. Of course. But we're not. 34.05. I just didn't want the broadening formation to come back down here. Little stinker. There's the, okay, we're gonna try one more time. So the inside, no, the 2 down, 2 up 15er just triggered. $53.41. But I want it to blast. So we have a simultaneous 15-minute 2 down, 2 up. I probably should have re-entered right there, so I'm a bit late. I should have re-entered right there. I'm sure I'll get stopped out again. This is just not blasty-full. And I want the 15-minute to stay in force, so above 53.0650. 53.0650. That's close enough. And technically the target would be 53.40. Oh, and okay, I will not be pressing buttons anymore. Nope. But so remember this range. My stops are probably just too tight, but failed down there. They're trying to go up here, up here, up here. It's just really not very aggressive. Oh, 550. All right, if we can get an inside bar, I'll try one more. Now it's going to go 2 up. I'm just going to miss it. Oh, give me an inside bar. Give me a 2 up. Actually, a 2 down first would be ideal. But yeah, but Inside day. Okay. This is why I don't trade inside days. Because we are right back and almost below the 15-minute trigger. And just nothing's getting like momentum up. That was the first corrective activity after a while. Last time I'm trying, I swear. I gotta see a 2 up though. Nope. Nope. 15-minute is failing. Ooh, 322 fiver. I should have shorted. This is crazy. So we just negated the 15-minute trigger, meaning we're not below it anymore, which was here at that high, 53.0650. And then we got a 322 reversal. So now they're trying to come back down here. 52.81. Because it has to stay in force, and it's no longer in force. See, again, it's just a terrible trading day, which was to be expected. And that's what you have to figure out every morning when you come in. Do you have a daily setup? Is it close to triggering? Are you going to be stuck inside all day? If you're stuck inside, the moves just aren't fun. Ooh, Easter's next weekend, everybody. I have fun plans. I'm going to Key West. Never been. I'm very excited. It's like a 5-hour drive, and apparently the drive is really cool. Today is just gross. From Fort Myers. Yeah, we're not taking the boat. I'm gonna go swim with dolphins. Maybe. Very excited. Because I won't be here next Friday because it's Good Friday and the market is closed. FYI, if you didn't know that, market's closed, so I will not be streaming next Friday. So I'm taking a long weekend, which is much needed. The Keys are not 25 minutes from me. I'm in Naples, and we have to drive like across the state and like all the way down into the islands. I think we're staying at Isle Morada. Come on, go get that. I didn't get it, but... Yeah, but there's bars on the way. It'll be fun. That's right. Easter's also on April 20th. Everybody's going to hide the Easter eggs and forget where they put them. Oh, that's funny. Mommy, Daddy, I can't find the eggs, and neither can we, son. See, when I'm bored on stream, I just talk too much, so I'm sorry. Does anybody have any strat questions? Oh, I got a Marco a lot. Marco's 30 minutes from me. Yes, I am Jamie. Yes, I am trading futures more than options now because, well, the volatility is amazing for futures. And secondly, the premiums on SPY and Qs lately are super jacked. They're like, I think like 0 days were like 180% IV. It's insane. I'm old. Thank you. I am 40 years old. The cheat sheet's also in my pinned tweet on Twitter. Yeah, those I'm not cool with the IV on the indices. Yeah, nothing to see here, folks, you know? Just stuck. Just stuck. Can the strat be used to find Easter eggs? Sure. My high win rate setup. Exhaustion reversals. I can't talk to you about that, Sand Dollar or Frankie. I am definitely 40. I have an almost 20-year-old daughter. Ugh. Never mind. Yeah, 0 TEs are insane right now. Yeah, and I shouldn't have clicked any buttons, to be honest. And I knew that, but I was like, oh, I'm sitting here. So this is where boredom gets you in trouble. You should shut your computer and leave, which is what I said earlier. I said if I wasn't here, I would not have my computer. I would not have my charts up. This is not the day. And I took 3 paper cuts, and it serves me right because I shouldn't have done that. But I mean, it's not much money that I lost, but you see my point. This is why you shouldn't be trading today. It is nice being close in age to her.
Hey, Sarah.
Sort of. We kind of fight like sisters. Hey, Jim.
You know what? I mean, it's just such a change of pace when we're trading within the initial balance all day after the last week we've been through. It's mind-boggling.
Yeah, but also kind of to be expected because after such extreme volatility, you know, things gotta kind of just settle down a little bit. But yeah, it's not a day. It's not a day to be trading for sure.
Well, I'm getting ready for the 1 o'clock to 2 o'clock White House press conference that seems to be popping up every day this week. So I'm going to be on my toes anyway, just in case. But thanks for doing this. Thanks for being here with us. Key West is awesome. I've been there a couple of times, and you're right. It's a long car ride.
Oh, where's your favorite place to go?
I don't know. I mean, we were in the heart of the the tourist area, but it's not, it's kind of like a really nice combination of tourists and locals, and everyone is just as chill as you could imagine.
Oh, very nice. I heard about the I think it's called Garden of Eve or Eden. It might be a topless bar. I was like, oh my gosh, interesting.
Oh my, oh my. Well, listen, you have fun. You
Yeah.
have a great weekend and safe travels. And in the meantime, we're looking forward to seeing you back next week.
2 weeks, Easter, Good Friday, so I won't be here next week, but yeah.
You're right, absolutely. All right, folks, hang tight. We have a special guest coming up right now for midday markets. This, Sterling Smith has been um, with us for a long period of time, and he is the undisputed champion of commodity futures and other stuff as well. Good morning, Sterling. How are you? Nope, can't hear you, bud.
Good morning, Jim. And I am doing better than most people this morning as I have let the trading not happen today. Today is a day for learning and observation.
Yeah, well, that's pretty much what Sarah was saying earlier today. But before we get started, how's everything in Nebraska?
It's sunny. The weather is improving. We're going to see a high on Sunday of 80, so I'm going to fire up the grill. And it's sunny and pleasant. And I'm going to Florida next week. So I imagine the weather here is going to be spectacular.
Fantastic, fantastic. Did you paint your walls yellow?
Yeah, my office has always been yellow.
Oh, okay. My bad. My bad. My memory's not bad. It's been a while since you've been on, but no, we had the WASNI report yesterday, I believe. I think there's probably another USDA report today as well. I'm not even sure where to start. Maybe we start at wheat. I don't know. What do you think?
Let's go ahead and start with corn here, and we've got
Okay.
a lot of stuff to cover. The WASDE will actually be out in 1 hour. Now, this is the April WASDE. They are not expecting any big changes at all. We're expecting numbers to be basically in line with what they were last month. So, given everything else that's gone on, the WASDE probably today will not be that big of an event other than the first couple of minutes, unless there is some big hidden surprise there, which I really don't see going on. So let's talk about the corn market here. Grains have been moving up. This is a function of exactly one thing, the dollar. The dollar index has taken a pummeling here, and this is good, actually bullish for grain markets. Now, Jim, can you put up a slow stochastic on that May corn chart? Because there's some things I want to point out here.
Sure, I can. Bear with me for a second here. I'm just going to quickly add this thing. This is a daily chart, by the way, Sterling. So
Yeah.
stochastic, we'll do the regular stochastic, not stochastic fast, but slow. What periods do you want? 7, 14, 3?
7, 14, and 3 are perfect.
There we go. I'm going to add that. All right. It's on this panel right here.
All
The
right.
bottom panel. The bottom panel.
There we go. So, looking at some indicators here, we are getting close to an overbought situation. Now, this rally in the corn has not been driven by anything that's all that fundamental. We have extreme currency volatility combined with tariff threat. So, what that has done is that's pulled forward our export demand, and we've seen very good export sales, and this has been running on since December. So, that has worked to lift the corn market right now. We are right about to move into a new phase for the corn market. We're in April. Guys are going to start moving their tractors and start doing serious field work right now because we're moving past any freeze possibilities. So now we're going to move to what sort of weather we see and what goes on with planting. And that can induce some volatility, especially in a market that becomes ripe when profits. It's no surprise what we've seen on Wall Street and other things. When we see markets that get ripe with profits on one side, which in this case, if you're long corn, you've done really well, that can make us subject to liquidations because fund managers are going to need to move assets from one pile to another. And very often when they have big winners, risk off means selling big winners in the corn market where we're configured right now. So that is the biggest risk I see right now with the corn is that we're overextended. We don't get any bullish surprises today. and we see further global macro moves, which are really what we need to be looking at right now for what's going to be the outside driver for the corn market. Is right now the weather does not look like it's going to be too problematic, particularly in Iowa, Nebraska, Illinois, and Indiana. Southern parts of the country have seen delays, and that will slow things down, but those are the more marginal producers. It's Iowa, southern Minnesota, eastern Nebraska, Illinois, and Indiana that really count.
I see. So it's full force forward in the planting season. We don't see any impediments there, weather-wise or soil-wise or any other wise. Am I hearing that right?
Right now, for the next 6 weeks, we're not really looking at any big problems coming up. What could change things a little bit is we could see some acreage switch. Soybeans are now subject to a 125% tariff going into China. They're still holding up okay because of the dollar weakness. If farmers start to get it in their head that we may be looking at lower acres for soybeans, we could see more acres move into corn. Not an enormous amount, but enough to move things a little bit at the margin, especially with a market that's gotten this ripe.
So it has, well, let's focus on corn for a second with respect to tariffs. Is there any, what are the issues in the pathways here?
Well, we don't export that much corn to China. They really don't buy corn from us in mass like they do soybeans. So corn is getting a little bit of a free ride here. Now, depending on how the rest of these tariffs play out, particularly going into Japan, South Korea, and into Europe, that could create a bit of a headwind. And we know we have bountiful supplies of Brazilian corn, second corn crop, it's getting harvested, and there will be plenty of corn coming into the market very, very soon. In fact, the Brazilians did raise their crop output to a whopping 97 million tons. So we are looking at very large production coming out of South America, and thinking forward a year or two, these tariffs, what they're going to do, it's going to force more production out of Brazil, and they're certainly capable of adding acres down there.
Yeah, that makes sense. And then Brazil has a lot of options, is my guess, and who they sell their crop to.
Exactly. Their option would be the planet Earth. So it's quite open where they can sell this. And if we feel, and if people feel American tariffs are a problem, or for some reason, whatever political motivation there may be, yeah, we'll buy some corn from Brazil. We need to diversify our supply chain, which is something we're seeing in the bond market, which is really the big thing today.
Yeah, we could even get to that after we get through all the grains. So it's good to know that we're not going to put a bunch of corn on Elon Musk's rocket to Mars. So we'll keep it on planet Earth.
No, we're keeping the Martian demand on the balance sheet at zero again this year. So I would suspect that I would not look for any exports to the moon or Mars at any time in the near future.
All right, very good, very good. All right, where should we pivot to next?
Let's take a quick look at soybeans.
There we go. You know what? I'll leave the RSI on there. That's fine. Here's the daily soybean chart.
And the soybeans, again, remain bullish because there are these ideas creeping into the market that we are going to see more corn acres, and some of that coming at the expense of soybeans. So that is keeping the bulls firmly in place for now. We won't really know how well this materializes until we get into May. You can plant corn to about the middle of May. You can plant soybeans all the way up to nearly the end of May. So there's still some time for some switching going on here. Right now, the soybean market remains well supported. We are in a spot where Brazil right now is the biggest supplier where we are with logistics, but typically Brazil begins to run out of soybeans as we move into the June, July area. So that tends to help our soybean prices as our beans become available sep Ocnov.
Totally makes sense. And what about the crush? Is there any surprises going forward with that?
Well, again, one thing that the U.S. is doing better is we're doing better at exporting and making soybean meal. And that is working to support crush. Meal is a refined product that China does not really buy from us. The people who buy the soybean meal are the Philippines, again, South Korea, and Europe. They purchase that from us. So how the tariffs work out with that, again, it remains to be seen. We could get a tweet in 5 minutes that could really work to boost soybean meal exports. We could get a tweet in the next 5 minutes that just does the opposite.
Yeah, I know. It's been a wild I'll be polite and say it's been a wild news cycle the last, I don't know, couple of weeks.
Yeah, that's putting it gently.
We're gentle over here at NinjaTrader. All right, so that's the soybean situation right now. It does look like today, anyway, we have a little bit of a breakout of a previous high back here at April 1st for whatever reason.
And if we get through today's WASD, which there is probably a little bit more of a chance of seeing a smaller soybean ending stocks number, simply because we may have exported a little bit more as people are front loading that. The soybean balance sheet is inherently a little bit tighter, and right now we're looking at 380 million tons. If that were to come down to 360, that would support this breakout. If we see it go the other way, though, this breakout we could end up, if we get a reversal here, having a failed breakout, which again, as we start to think about what's going to happen next week, can be a little bit of a problem.
And how are the large specs positioning themselves last time we got a report?
They are buying. They are the main thing in here, driving and owning this. And as we know, as we've seen in other markets, they can switch out on a moment's notice, and they tend to move as a herd. So negative momentum could be met with a sledgehammer right now. And one thing I would like to point out, we've done pretty well in the grains, especially vis-a-vis oil. When you think about commodity index funds, which are heavily weighted to oil, and oil is obviously having its problems. So far, these funds are holding up pretty well with this, and we haven't seen any big selling with them.
Totally makes sense. All right, I got it. Where do you want to go to next?
You want to go to bonds and go global macro?
Well, let's talk about wheat really quick
Okay.
if we can. Let me just throw up
absolutely.
a May wheat chart, and then we can go global macro with bonds.
Okay, wheat, we're seeing a chart that looks like a miniature soybean chart. We have good technicals here. We have a nice double bottom in place. We have wheat moving higher. One, we're probably going to see fewer wheat acres in the United States. That is thing one. And we have positive momentum here working to drive the wheat higher. And above all of this, when we get to the bonds and the dollar, we are looking at a weaker dollar environment. The U.S. is not much of an exporter of wheat. But as that dollar drops, our wheat gets cheaper to the rest of the world, and that can be good for some minor moves in exports and something that can help lift the balance sheet a little bit.
Well, yeah, but we have Russia, Ukraine, Canada, Australia, Argentina all in the game here, right? Of growing, of distributing wheat.
Of distributing wheat, exactly. And that is where we do have a little bit of competition. The U.S., again, is a bit player in the export market, but that doesn't mean we have to be a bit player. Again, if our prices come in, because normally U.S. wheat is much more expensive than the rest of the world's, if we see, continued weakness in the dollar, that will make our exports more viable.
Totally makes sense. Totally makes sense. All right, well, let's roll over. We could do the 10-year note, the 30-year bonds. What's your pick your poison here?
Let's pick the poison. Let's look at the 10-year.
Oh, wait, that was the wrong click. Here we go. ZN.
ZN.
That's an old note. There we go.
Hot diggity dog, look at this. The 10-year note is the benchmark number for interest rates pretty much globally and certainly within the United States. This is a chart of the futures, and when the futures go down, interest rates went up. I looked just a minute ago and we were trading above 450 on this. And this is a problem. In fact, we were above 455 ever so briefly at the lows. The bond market in the last 2 weeks has changed. For the past 30 years, our bonds and our debt have been the TINA. There is no other alternative. Meaning if you need overnight money, you need to park your money somewhere, our bills, our notes, our bonds were the place that you went. That has changed. We have German debt that is now offering positive returns. Combined with the global trade situation, I think we are seeing ever so slightly and ever so subtly a bit of a change in demand. Now, when we hear all this talk about trade, we talk about countries. Germany's doing this, China's doing this. The bond market is a little bit different. It's labeled as a country, but we're not playing a game of risk here. We're playing a game with individual companies. I want you to think about a company like Royal Dutch Shell and that giant tower they have in Rotterdam. Every night they have overnight money to park. I think we're beginning to see across all of these companies across the world, we are seeing money slowly moving into other debt instruments so they can diversify. And that has uncorked an unintended consequence here in that market rates, not the one the Fed sets, but actual market rates are moving higher. This is inducing volatility. Now, the day we got the big tweet, bond spreads were blowing out. What I'm talking about are like the price of a 10-year straddle, which is normally 2 ticks wide, blew out to 20 ticks for a while. That is getting close to what El Hassan Alarian said is a credit event. This is what's making the stock market partially intractable today, is we have a combination of mixed to lowered extreme choppy twitchiness in the stock market against a background of falling bond prices. This is not normal. Normally we see stocks go up, interest rates go down, meaning the value of both assets are rising. Now we're seeing the barbell move the other way, where the value of these assets are dropping. And that is inducing some of the volatility that we're seeing in the stock market.
Yeah, the 60/40 passive investor is like, wait a second, I'm losing money on both sides here. What's going on?
Nothing's working. The only thing that's working for me is I've managed to get everything before most of this. I didn't escape completely unscathed, but I escaped, and I'm sitting in money market funds simply because it's like we've flown into the Bermuda Triangle. The compass is spinning this way, the altimeter is spinning counterclockwise, and we don't know. And we don't know we don't even know what we don't know. So that's creating a lot of discomfort and dislocation right at the moment.
Well, send me a text message next time, would you? I mean,
Well, here's something to point out. I've been on the show a few times. People know that I'm a big muni bond investor.
yeah.
I blew out my muni bonds on Friday. They had kind of peaked, and I'm like, I'm getting a little bit more uncomfortable with this. Muni bonds on Wednesday had their worst day in 31 years. Muni bonds are where you put, you've got money market as your most stable, quiet thing. A muni bond fund comes pretty close to the next thing on your spectrum of risk. And when you see something like that become destabilized, you know that things are getting uncomfortable.
Yeah, I actually worked as a muni bond issuer for the great state of Indiana way back in the day. Go Hoosiers. So I'm very familiar with the market. But yeah, that was a big dislocation too. So everything, like you said, the compass is going crazy, right? It's going haywire. What is it going to take to kind of settle down the middle and long term part of the yield curve here?
Well, we need one is clarity on policy. We need to know where we're going. Wall Street needs this. The bond market, which is actually bigger than the stock market by about 25%, needs to know where we're exactly going on these tariffs. Until we get real clarity on that and begin to see something that resembles actual policy, not we're going to make a deal, but here's how it's going to work, you can expect continued volatility and fear moving into the market again until we see real clarity.
Is the Fed going to have to step in, do you think?
The Fed can step in if we see right now we're at about 452, I'm guessing 453 on the 10. If we were to see another spot where we move up sharply, understand these things were trading. If you look at the top of your chart there, that was 1, 2, 3, 4, 5 days ago. We had yields that were under 4%. We were trading, I think the low of the move was 394, 396. Okay. We've moved up 50 basis points without any Fed moves at all. If we were to see that market move out of control noticeably, you could see the potential where the quantitative tightening may have to change and turn into quantitative easing. The Fed doesn't want to do that because if it happens and they were to have an emergency rate cut on the front end or begin to have to step in to calm the long end, that might very well be viewed as a panic.
Which could backfire.
Which could exactly backfire. While the Fed certainly has the horsepower to stabilize the bond market, where you'd get the real nervousness would be, my guess, is in the dollar and in the equity markets.
It seems like all the Fed speakers this week are talking about are coming up with a hawkish point of view. Like, hey, we're worried about the inflation expectations, even though we had a decent CPI, PPI. We're going to hold for a while.
Well, see, here's a big teachable moment for everybody. This may be the most teachable moment we ever have. The CPI number came in as a negative number. Today's PPI numbers, or yesterday's, came in as a negative number. Those things are the most bullish things you can have for a bond market, period, bar none. And what did the bond market do? It did exactly what it wasn't supposed to do and did it in a big way. Now, this morning we had our University of Michigan sentiment numbers, which that's in the scale of economic numbers, that's not a major number. It's kind of a sub-major. It's like a AAA number. It's not a major league number. But I believe those expectations for inflation going forward were off the charts. And again, that just adds to this very unpleasant cocktail we have of fear, uncertainty, and a lack of knowing.
Yeah, I mean, you nailed it. That's what it seems to be. It's this market uncertainty. None of these markets like market uncertainty. And that, when I say none of them, I mean the domestic markets and the international markets. I mean, we saw what's happened to the DAX, the Euro Stock 50, the Nikkei. It's, they're not immune to any of this.
No, the only markets actually that are immune to this is actually the grain markets in a way, because we know food demand will remain pretty much unchanged. Yes, that corn that was destined to go for a cow to be a steak might be turning into a pork chop, but nonetheless, it will get consumed. So that's one thing where what causes destability in a commodity market like a grain market is production instability, which we really don't have right now, which is something that bullish stool we have right now, that's one leg that really isn't in place.
So I'm going to throw you a curveball here, maybe not. I mean, I know you're going to hit it anyway, but I'm just going to throw up the Euro FX futures versus the US dollar. And, we're up, just to put it in perspective, from February 28th till now, the euro is appreciated 10% versus the US dollar.
Yeah, we've moved from nearly par up 10%. And what that is a flight of capital. People are concerned about holding dollars. The euro and the European Union have been quite measured in their behaviors. They're Europeans. Europeans are by nature measured in their behaviors. And that is something that has lent a lot of strength into the euro and helped compound the problems with the dollar.
Yeah, and this is just a tremendous move up. I mean, it's when you're talking about import exports, like, that's one thing, but you know, I'm going to Europe this fall. I got to buy a plane ticket still, and I got to get an Airbnb. This is not good.
Well, it's mixed. Plane prices and plane tickets have actually come down as the fear of recession and the economic nervousness has taken those off the bid. So your plane ticket has probably gotten cheaper, but your Airbnb and your Heineken's at the pub just went up vis-a-vis the currency move by 10%.
It's Peronis, by the way, Sterling. I'm going to
Peronis.
Italy. We're doing the Peronis. We're not going to Ireland.
Oh, I am saddened. One of these tariffs that's getting hit is I'm a fan of Guinness. And if you buy Guinness at Costco, that's about to get slapped with a 25% tariff.
Ooh, that's a big one. Not them are fighting words right there. But what do you think about? So now everyone's talking global recession, and there's even some folks out there saying, "Hey, we're in a recession already in the U.S." Are these real fears, or is this just a temporary, until the dust settles moment?
Well, it depends on how long it takes the dust to settle. Are we at an incipient recession in the U.S.? We may be getting there. I think it'll be a recession of displacement. I think certain things like housing prices may not be affected. Unemployment may not even be affected that much due to demographics. However, we could see an earnings recession wherein people just are not consuming as much. People are not going out and buying things. And we could see that part of the economy probably, feel a little bit of tension. going on.
Yeah, my wife hasn't got the spending memo yet, but hopefully she picks that one up sooner than later.
Exactly, exactly.
Wow. Okay. Well, we'll keep our eye on that. I'm sure that's part of the calculus going forward, right? Especially on Capitol Hill, when, if I'm an elected official, I don't want to be the one that's responsible for ushering in an era of, a recessionary era.
Exactly. And again, we haven't tasted the tariffs yet. Their ships, well, actually, what's
Yeah.
on the water hasn't been tariffed yet, but what gets loaded will be. And that's the ship on the horizon. And how does this happen when it finally arrives here, if it in fact does? And again, that just piles into the uncertainty due to the approach here. Those initial tariffs were just unlike anything I could have calculated or ever even imagined. And having been involved in global trade for 25 years, I'm like just looking at this and it was just mind boggling. And that's what produced the initial shock. And now we're trying to work back. But you can picture how to picture this is imagine you have a nice state of the art laptop, okay? And you read about this new quantum laptop that's going to be coming. Things are going to be completely different. So you take your old laptop, you smash it with a hammer. Now you don't have a laptop. You call up who's going to bring you the quantum laptop. Yeah, we're going to have that for you in 3 to 5 years. That is the best analogy that I've been able to come up with, which how this initial shock from these proposed tariffs are now actualized tariffs really affected the global economy.
Yeah, I just pulled up while you were talking. I just pulled up a Japanese yen chart right now, and this is unique for the Japanese yen to be rallying nonstop for a long period of time here, and we're just still moving forward here.
Exactly. And when you pull up that dollar index chart, which I know you're going to do next, you can see this is not the dollar against the euro. This isn't the dollar against the cable. This is not dollar against the yen. It's everything against the dollar.
Yeah, yeah. So it's every single currency pair.
Exactly. And that's why the dollar index again, it's down what another full point today, give or take.
Yeah. So what is that implication on? So if the dollar keeps falling, right? It keeps going down. What's that implication on everything from trade balances to production?
Well, the dollar is compensating for tariffs. The dollar's down 10%. We have a baseline 10% tariff. This is not rocket science. So the dollar has to adjust vis-a-vis that tariff to meet the demand of other countries. Understand, it's not that the head of the EU is sitting here, I am going to dump Mercedes Benzes on the United States. It doesn't work like that. People buy the product because they want the product. If you want to really increase US exports, we need to make food that complies with the European laws. They don't want our frankenfood. Okay, you have to make things. Japanese, you want them to buy our cars, we need to make cars with the steering wheel on the other side. Okay, that's how this really works. It's not a game of risk where you have one country and you're pushing things around. It's a much more complicated and a much more subtle thing in a way to increase exports. Just using blunt force trauma is producing, the things that we're seeing in the markets.
Yeah, no, that's a great analogy on the car for sure.
Yeah.
Oh my goodness. All right. Let's keep moving here though. Let's keep I did want to ask you, I don't know if you have an opinion on this. I was looking at lumber. I don't know why. I like to look at this chart. This is kind of a daily chart. Um, Only to give me an idea. Well, you mentioned the housing market just a couple of minutes ago. And I associate that with, with not only real estate transactions, but with new home building as well. And so I like to look at the lumber market. And right now, these prices are, we're getting close to a double bottom here in lumber.
Yeah, and we could see domestic lumber prices skyrocket. We get a lot of lumber from Canada because it's cheaper. It's that simple. We buy lumber there, the supply chains are in place. All of a sudden, if we have to turn to domestic supplies, we don't have the infrastructure in place, going back to the smash your laptop analogy. And this will work to force lumber prices higher.
So this isn't just a case of, well, we got forests all over here in the US. Let's start cutting trees down.
Yeah, and in order to do that, first you need lumberjacks, you need trucks, you need the mills, and everything in place to make it happen. The fact that we have something doesn't mean it can be brought to market, in 35 days. It just doesn't happen like that. And this adds into back to the nervousness in the stock market. If I'm Weyerhaeuser, okay, what do I do? Do I build this infrastructure and spend all this capital and it takes 2 years? How do I know if these tariffs are going to be in place in 2 years? I don't. So the easiest thing to do is sit on your hands, and that'll just force lumber prices higher.
Yeah, it goes back to the uncertainty. And now we have a pause, right? We have a 90-day pause on some of this stuff to negotiate, to come up with a deal. We're going to make a good deal. So we have 90 days now. In my mind, that's 90 days more of uncertainty, unless something starts happening quickly.
That is exactly right. We will have uncertainty until we don't. And that's what makes the equity market so uncomfortable is we don't know. We don't know if a deal is going to be made. We don't know what kind of deal is going to be made. And are we going to revert back to this in 90 days? We don't know. So again, everyone kind of has to take a step back and see, where you exactly stand with this before you make a big capex decision that could prove to be very, very costly.
Well, not only that, by all accounts, and I'm not an expert, and you'll know more about this than I do, but it's 18 months to 36 months or longer to build a new factory, a new facility here for anything.
Exactly. We're talking about, tariffing pharma. Okay. I'm all in favor of us making things here, but we need to do it. We evolved into this situation. We need to evolve out of it, not crash out of it. And yeah, to make a new pharmaceutical plant, 5 years. 5 years to get production in place. What do we do in that intermediate 5 years in order to get, things for antibiotics? Well, you're going to have to pay the tariff if the tariff's still there.
Yeah. Well, and that's an important one, by the way.
Yeah.
All right. So before we get to the stock index futures, I was going to ask you actually about livestock here. I'm just glancing at my notes to make sure I'm not missing anything. So we could look at feeder cattle or live cattle.
Let's look at lives.
Okay, and then live cattle. Let me see if I got it on my chart. I know I do have it on there. It's LE. There we go. Boom. I have the June contract up.
Okay. This has been, and if you can press this chart back and show more time, this has been a raging bull, a stampede, as it were, for the cattle market. A literal stampede because we don't have enough cattle. We have a continually shrinking herd, and what, at least looking back, was a very healthy consumer willing to pay up for beef. This thing is hypersensitive to consumer demand. One of the things that I use to measure inflation and look at things are boxed beef prices. And as you can see, we have a massive double top in what was a raging bull market that still has strong fundamentals. This I find to be one of the more worrisome things in that cattle have come off the bid and come off hard. And what's going to happen is you will get, the speculative sell-off. We had a lot of longs in here, drove it up. We've come back down. We're not going to get rid of that cattle shortage anytime soon, simply because, again, you go from calf to steak, we're talking 18 to 20 months at least, depending on the weight of the cow. So we're going to have a market that's going to be tightly supplied where you're going to have pricing issues, quite possibly. So that could spell trouble for ranchers. That could spell trouble for livestock producers. It might be a little bit good for the packers in that prices come down if they can still hold prices in the grocery store. But cattle packers have not really been making money for the last 15 months. Tyson's making its money in the hogs and the chickens. As far as exports, we don't export much of this. There is some that goes on, but it is not a big part of things. And where do we export most of that cattle? Where does it end up going, Jim? To Canada.
Yeah.
Toronto buys its steaks in the US. They don't buy that many from Brazil and Argentina. So again, we've created another unintended consequence in dealing with trying to deal with a very complicated, multifaceted situation, which is our trade, with a blunt force object.
Yeah, and those two points are kind of fighting against each other, right? Reduced
Exactly.
demand. Yeah, I hear you. And by the way, for those of you who are new to, I mean, these are good futures markets to trade everything that me and Sterling are talking about. Live cattle is the contract. Live cattle is cattle we're ready to, that's going to go to slaughter and we're going to make into food. Feeder cattle is younger cattle, right? That we're feeding to become live cattle. Do I have that right?
Exactly. That is exactly a perfect description of that. That is exactly right.
All right, all right. So it took me only 30 years to figure that out, but I I have it now.
Yeah.
All right, let's go. We have some time left on the board here, and I'll just pull up E-mini S&P chart. I know you're going to have some opinions on this. Just kind of set the table real quickly for you. We're down now. We had that high peak in February on February 19th. Right now, as we speak, we're down about 14%, give or take, from that high peak,
Yeah.
with what's turned into some, and I'll use the word monster candles, right? All week
Yes.
long and then into last week. These moves have been bigger than I've never remembered such big moves for so long in this market my entire life.
This is pandemic, 2008 level moves, going back a bit to the dot-com bust.
Yeah.
What we have, there are many things in play in the stock market. First of all, we obviously have the tariffs, and that's the big obvious thing, which is obviously quite bearish. When we talk about trade, there's a lot of talk about everything that is all these manufactured goods and making things in factories. The US evolved away from that long ago. We export services. Microsoft, that's a service. Apple makes money, yes, on selling iPhones overseas. Where do they make more money? On the subscriptions, on all of that. We export enormous amounts of services that counterbalance this. The economy has evolved. And some of that is not being taken into account here. And that's adding to the volatility, particularly with the tech stocks. Because suppose we start levying tariffs on services, all that Microsoft that gets sold into the EU, into the Asia Pacific, all of that becomes a thing. All those Bloomberg terminals, for goodness sake, sitting everywhere. That's a service we export. So we're not approaching this from a balanced point of view, which adds to market risk. Now, what happens when you get situations like this? Option trading is enormous. And your previous guest talked about the crazy implied volatility. Now, right now, if you're a long-term investor, you really don't know what to do with these. Are these good levels? Most likely, yes, they are. But your horizon might be 2 years, 5 years, something like that. When we have option trading go on, there's people who buy options, and then there are the people who sell the options. The people who sell the options lay off risk immediately. So if people are in here buying puts galore, what they do is they sell stock against it to keep themselves towards a position called delta neutral, because their goal is to make the edge. And when you get this volatility, and when we had the big up bar there, well, I'm short all this. The puts are blowing up in value. They're collapsing. That's good. But I have all this stock I have to buy, and vice versa with the calls. And that induces a lot of very, very spot on volatility as markets try to adjust, because while we've seen these big macro swings, if you look at the price of Microsoft, the price of Apple, any of these stocks have had incredible intraday moves, and that blows up volatility and makes options very expensive. So in turn, the people who are buying the options, not the most aggressive trader, but the next most aggressive, have to back away. And some of them may become option sellers, which option selling is good, but you need to be really good. Those are the aces in the market, the people who are really good at this. Because yes, I'm selling high implied volatility. You don't know where the next pile of volatility is going to come from and what it's going to be. And that can end up creating margin problems and just creates more difficulties. And that begins to affect volume, and that makes the market even twitchier. Now, next week is option expiration, is it not, Jim? And are we not expiring on Thursday and not on Good Friday? Is that correct?
Now that you mentioned, I didn't think about that. I didn't think about that because Good Friday is sneaking up on us. But I do believe you are correct because all the markets are going to be closed on Friday.
Right. So that's going to move option expiration to Thursday. And mercifully, this is April. It's not a triple witching month, but we're going to have all those options expire. And given the complete, shotgun blast of what's gone on, that's going to make that, even more volatile. And I think some of today's action we're seeing are actually people trying to front run that, trying to get their positions. While the market compared to the last few days right now, at least, is fairly calm, they're trying to probably get this reeled in and get their positions back under control because they've, you know, you think you're a futures trader, you went for a ride. If you're an options seller, if you're a big company like Optiver, you've gone for the ride of your life.
Yeah, and today does seem like just looking at this daily chart here, we have a doji candle today. We have a inside bar by the wicks, by measured by the wicks, and maybe even by measured by the body. There. It seems to be either everyone's really tired,
Right.
or there's a pause going on, waiting for the next Capitol Hill 1 o'clock, 2 o'clock press conference.
That could be it. But one thing, if we look at where interest rates are, that should be inherently bearish for this. That is a bearish backdrop.
Yeah.
And right now, we're not doing what we're supposed to be doing. So that's why I think you have a lot of, big guys are backing off because you look at the red bars, okay, we understand why those happened.
Mhm.
We have the big green bar, we know why that happened, and we can't predict what the next thing is going to be. So it's easier just to back away a little bit. And I think that is what is inducing the calm in what may very well prove the eye of a hurricane.
I like that analogy. Today is the eye of the hurricane. Yeah, it just seems like a lot of the talking heads, and again, maybe you fade this, I don't know, but a lot of the talking heads now are starting to say, well, we've seen, the lows are in on this move down. We've seen the worst of it. It could only get better. The news cycle could only get better. So 5,000 is a sticky level here in the E-mini S&P, or at least it was for 3 or 4 days. And now we're kind of, inching our way back up, slowly crawling up the fib retracement level. And hey, everything is going to be okay eventually. So, what do you think about the idea of, hey, it could only get better from a news point of view?
Okay, when you see big drops like this, there's an 85% chance of a retest of a low. The green bar is technically a retest of that low. However, talking heads on TV, and I guess I am one of them, will always with the stock market, yes, when prices are down, we're below the 200-day or whatever, historically that is a good buy. What I would be concerned about is we don't know the landscape going forward. We could see something happen over the weekend with Iran. I have to think China in their current mood, something happens in Taiwan. We could have a whole new set of events. We're doing this against the background of rising interest rates. Okay, so do we get another retest to the bottom? Not inconceivable at all. We could get a retest to the bottom this afternoon with a news conference. I think most of those traders in Chicago and things are probably going to be ready to leave by 1 o'clock. All of a sudden, all this option monkeying around goes away and the market starts to drift lower. We have so many unknowns. While in theory that's a good idea, how this is going to practice out right now could be a completely different matter on Monday.
So we have time for one more thought, Sterling, and you kind of just opened the door for a geopolitical conversation here. Is this Russia-Ukraine thing going to be just, hopefully solved sometime soon?
I wouldn't wager that it's going to be. I think that the tariffs have moved that off to the side. And yes, Trump's going to send an envoy to talk to Putin. Is Putin going to blink? Right now, no one's willing to blink all that much. So I would not hang my hat on that. If that does in fact happen, that would put a little bit of peace premium into the market. We have to weigh that against the situation in Iran. We have to weigh that against the situation in Taiwan. So you could win on one of those, but if you don't win on the other two, any amount of peace premium or calming of nerves may not be as much as we expected.
Yeah, well, we'll keep our fingers crossed. Sterling, thanks for being with us, man. I missed you. We got to get you back on. This is all great information.
Oh, anytime you want me on, I'm right here.
Fantastic. Well,
From
listen,
Omaha, Nebraska. And the next week I'll be in Orlando, Florida, and then be back here.
a mini vacation?
A little mini vacation and some things that I can't disclose just yet.
Very awesome. All right, Sterling Smith, thank you smash that like button, folks, for Sterling. We just learned a whole bunch of stuff here, man. Thank you so much, Sterling, and I look forward to talking to you again. We're going to move right into our hot commodity section right now with Tracy. Tracy, how are you?
Hey, how are you?
Pretty good. Happy Friday.
Right? It's been a long week.
I know.
Well, let's jump right in. We gotta talk about this move in 6E because this has been a huge move relative to the time frame, right? We've had a huge move up, obviously, coinciding obviously with the move down in the dollar. But I wanted to look at 6E because the dollar index is mostly 6E. And so I think this is, again, I'm kind of worried about how fast this market has moved in this length of time. I know that we talked about before, due to tariffs, they want the U.S. dollar down. In fact, even before tariffs were announced, we had the administration say, both Bessent and Trump said that they wanted the dollar down. But this move since April 2nd is worrisome. So what are your thoughts on this market? Is there more to run? Where do we see this ending up?
Yeah, I was talking about this a little bit with Sterling, but from a chart point of view, this is extraordinary. I mean, we've had, a breakout, as you mentioned, after the second. So on the third, we had a breakout, and then it was kind of like, oh, okay, maybe that was a little bit of a extra exuberance here. We kind of danced along that 8 EMA, and then we had our second breakout yesterday, and then today continuation buying big time. I mean, there's not a lot of levels up there, so I did put that fib extension up there. We achieved that 100%. That was one spot 1425 today. We do have a seller's wick, but the body of the candle to me looks like it's just as big as that wick. So I'm not ready to say this is a turnaround by any means. And then we have another level up here, 123, which is approximately one spot 1577, which is it's a target for me until some kind of change happens, some kind of news happens, some kind of, I don't know, maybe ECB in the US agree to something. I don't know, but this is looking pretty bullish.
Yeah, I feel like everybody's selling. I feel like central banks are selling dollars right now, and so I feel like that Bessent needs to get on the phone with somebody.
Yeah, I know.
We'll see. So, and let's go to crude oil market because, after that dip to 55, which is a very important level for, again, producers, we had Sheffield come out and basically say we can't produce at this level, and in fact encouraged more producers to actually stop, to pull off production at that level. We had that big move up as soon as we heard we had those, that 90-day tariff hold for negotiations. It's pulled back a little bit, but actually, it's remained steady for the rest of the week. So technically speaking, does this look like we are just at a pause and maybe could bounce higher or continue lower?
Yeah, that's a good question. I mean, today we have, and so many markets are like this today, where we have an inside bar, not only by the body, but measured by the wicks also. And it's a relatively small range today compared to the monster ranges we've seen the last 6 days. So right now, I get a sense that, okay, it's Friday. We've assimilated a lot of news this week already. Let's kind of take a pause. I don't think this is market happiness. I think it's a pause. And I don't think it's a signal of consolidation yet. The 8 EMA is kind of sloping down pretty nicely here, and that's going to be my line in the sand, right? If we could start trading above it, then I think, all right, I'm going to start looking for breakouts above that 62.75 level. If not, yeah, we could make new lows, but I think as you pointed out, there's going to be a low that's too low where from a policy point of view and from the producer's point of view, it's like, no, we can't do that. And it's going to kind of push prices up again. So right now it's a pause, which means from an intraday chart, you could kind of see and many markets are like this also, a nice kind of volume profile here. It's, almost textbook, point of control right in the middle. You're going to see, challenges to the top of the value area and to the bottom of the value area. Now we have as a matter of fact, we just broke out of the initial balance here, which is interesting. But I don't know. I think we're going to kind of settle somewhere in the middle here on crude today being Friday and all the data's in.
Yeah, I think so too. I mean, I think if it can hold this, 60, let's call it 60-50 area, that would be kind of a win for the week, even though it's down on the week.
Yeah.
Given all the other circumstances. Next, let's move to gotta talk about the gold market, Jim. It's not stopping. We're up another $80 today. It made, futures made a new all-time high. We talked about this yesterday. Do we have any levels even above that right now? I mean, what are the
I
what are the
know.
technicals looking like to you?
It's funny. I have a remnant on my chart here. I have this. I don't know if this was your level or Pax's level at 32.7250. Whoever's level it is, it looks like we're about to hit it right now. But usually when you see gold kind of get to a milestone price, and let's just say 3,200 is a milestone price, 3,250 is a milestone price. You kind of stutter around there, right? Not this time, man. We have buyers just shooting up. We have moving averages just shooting up. We're not quite overbought yet on the RSI. We're getting close. Stochastics are, equivocal. So I use the, the only tool I have left really is the fib extensions. And so I got a couple levels here that I'm not sure we're not going to get to quickly. 32.94 is one of those levels. That's at that 100%. At 123.6%, we're at 33.70. So again, this is super bullish until it's not. And this candle today is not suggesting anything but continuation buying.
Yeah, and I think this market is telling us that just because we have a 90-day hold on tariffs doesn't mean anything yet, because materially we haven't seen a trade deal yet. And Jim Bianco was on the other day, and he talked about, we just need to see a deal. So this market still seems very worried about the economy, recession, and possible trade wars heating up more so than already they have.
Yeah, and by the way, Tracy, by the way, real quick, this is gold priced in US dollars. This isn't gold priced in yen or anything else.
Right.
So that makes it even more amazing.
Yes, exactly. Good point. Let's move over to copper. I think is interesting because it's an industrial metal. It is called Dr. Copper for a reason. It's kind of the barometer of economic health globally speaking, and being that we have these recession fears, global recession fears, it kind of had that move down, still holding that $4 area, and has slowly been ticking up for since that low on let's call it Tuesday evening. it hasn't really stopped. It's not moving maybe as rapidly as some other markets, but again, surprisingly, last 3 days have been higher. So, are we breaking some technical levels here? Can we see higher in this market?
Yeah, it's surprising to your point that we have this big green candle here. We're through the 8 EMA right now, and there's no wick on the top of this candle, so there's no retracement for today. I know the day's not over yet, but it is Friday, and the next step up in my mind is going to be that 50 EMA and the 21 EMA on the upside. The RSI is kind of nicely swooping up. It's in a neutral position, right? It's 44.25. It's not overbought, not oversold. And we got some stochastics that are also kind of curving up a little bit at the bottom of the chart. So this is looking like there should be some continuation buying. Just kind of looking at this daily candle. And if you want to look at the intraday chart, it's even more exaggerated this move up today. But we hit that R2 level today, this resistance 1 level. That's the pivot level. I love these levels, especially when all the news is assimilated, because a lot of times it's one of the few things swing traders really have to hang their hat on a trending market or on a dislocated market. So now we're trading north of 4.5, which I think is a big deal. So a close above 4.54. So a close above that, I think, it should result in some more bullish disposition, short of whatever crazy news we're going to get over the weekend.
That's true. You never know what's going to happen over the weekend. Yeah, I have like 4.8 kind of as the next major resistance area. So we will keep an eye on that. And of course, keep an eye on the news this weekend because we never know what's going to come out of the administration. Let's move over to the platinum market. Again,
all right, hang on, let me pull it up. There we go.
Again, this market, hit those lows that I was looking for, 878 area. I said I wanted below 900 for a buy. That tanked on Sunday, and then pretty much this market has been inching higher all week. Again, not only a precious metal, but also has many industrial purposes. So one would think it's, closer to an industrial metal, generally speaking. But, this seems not worried about a recession either, kind of like copper is right now. So what are you seeing here? And what levels are, do we got to get above to push this market back over 1,000?
Yeah, so I mean, you nailed it on the downside, right? We saw buyers come in on the downside at that 900 level and sub 900 level, quickly got involved. So I'm extending this kind of area of support, right? We saw support all the way back here in March. Then we rallied a little bit. Then we came back down, creating this kind of double bottom again at that same level here. So I kind of drew my rectangle. It's like, all right, this is the area of support. And I'm dragging it over here because a lot of times, as we know, support becomes resistance and vice versa. And sure enough, it lines up with that 50% retracement. The way I have my fib line is kind of high to low. And it lines up perfectly with that. So that's kind of going to be the next challenge to get through that 50% retracement or my rectangle there. And then you've got, the 21 EMA, 50 EMA, and then the 61.8%. I don't know that we drive all the way up to the top. Well, actually, to your point, the $1,000 level is at the 78.6% retracement, but I'd like to see it close above the 61.8%, above all the moving averages, and maybe even a moving average cross to give me like high hopes we're going to get to 1,000 and above. And then the intraday chart is going to look a lot like the copper chart right now, where again there's that R2 again. Surprise, surprise, trading well above the initial balance. And the initial interesting thing here is the initial balance high is the same pretty much in the London session as it was in the US session. That's kind of interesting. But then we just kind of broke through it again. So this is looking a little bullish right now.
music to my ears. Love it.
I know,
Since
I
we have a
know,
little bit
I
of
know.
time left, let's since we have a little bit of time left, let's hop on over to silver and check that market out. Since we're on a metals kick today, because that market finally has been moving today. Another one of my favorite markets. Kind of looks like platinum, kind of looks like copper as well, right? We're kind of over that. We're at that $32 area. We were kind of watching that $30 area, and I was saying, I really wanted it to close above. If we could hold that $30 area, I thought it would be very bullish for this, because ultimately this comes down to fundamentals. And again, we have a 260 million ton deficit this year, and will be even higher next year. So even if we have a global recession, we still have a fundamental deficit problem with this particular metal. And so in addition, it is also a precious metal, store of value, and it tends to lag gold. So I think in a way, kind of the gold market is also pulling this market up as well. But can we hit that $35 area again and finally get above there? What do you see?
Well, this is actually looking better than I thought. I mean, we have a big buyer's wick down here on the April 7th. So, we have a firm area support here. We tagged it again on the 9th. But it's been uphill ever since then. And the ADMAs did a abrupt turn on yesterday. We're trading well above it, which is a good sign as well. Let me add a fib retracement really quickly here. I apologize for not doing this sooner. We'll see how far up. It's going to be probably north of 50% if I use the wick. Yeah, so we're approaching that 61.8% as well. Eventually, if we kind of stay up at these levels, the moving averages will all look like a bowl of spaghetti. They'll all be converging, which also could be a good sign on the upside. RSI is still pretty neutral, 47, but we did kind of have a nice slope up on RSI. And this is what I love about some of these oscillators. Not so much this idea of overbought or oversold, but how quickly does the state change of the oscillator? How, when you have a negative state, how quickly does it get to a positive state or even an overbought state? And so that's a pretty decent slope for that over the last 5 days. So again, this is looking pretty positive as well right now. And for whatever reason, money is flowing into this market today.
We love to see that. And with that,
what?
It is the weekend.
Hang on. One second. Wait. No, we're not yet. And we're going to spend one more minute. We're going to go to the Bitcoin. I want to put up the Bitcoin. And I know I'm throwing you a curveball.
Oh, I talked about.
There we go.
I know you're throwing me a curveball. It wasn't on the list for today. No. I thought was interesting, and I pointed this out in chat this morning, that Bitcoin had caught a bid and was kind of decoupled from, at least for today, the NASDAQ. And I thought, maybe it's more correlated to the dollar today, right? Like Bitcoin dollar down, Bitcoin higher. What are you seeing over there?
Yeah, I mean it's a nice green candle, but it is an inside bar still, right? So it's I'm not ready to say, all right, we're going to break on through that 21 EMA yet. And this is kind of a squirrely market, right? Because when I say squirrely, it's like the correlations between the other markets, they just change all the time, right? But it does tell me a little that folks are opening up their wallets a little bit and trying to get back involved in the Bitcoin. We have a really nice area of support here. It's 76,680. We could round that either way you want. So it looks like maybe a little consolidation around in between the 80 EMA and the 21 EMA. Again, anything could happen this weekend, so we'll keep our fingers crossed.
All right. Thanks, Jim. I appreciate that.
So a great week.
Have a great weekend.
Thank you, Tracy. Appreciate you. We did a lot of work this week. Appreciate everybody coming to NinjaTrader Live. This has been a fantastic experience, hopefully for you guys too in the audience. And appreciate you. And remember, we're not going to broadcast this afternoon. We're off for the afternoon. And I do want to leave everybody with the most important message of the day. Please be safe out there and be good to each other. See you soon.